YouTube live il irukka YouTube. Okay. So good morning everyone. Ellarume eppadi irukku, like how you feeling? Okay, right? Ellarume happy irukku. And guys on the live also, good morning Deepthi, Meenu, Raja and Shweta. Good morning. Have a great day. Let's kill it in CMA. This area is the most scoring area, and not even the most scoring, it is the most asked question from this area, company audit area. So today we will be focusing on company audit, the normal company audit, secretarial audit, cost audit. Then what was the extra? Something was NFRA was there, internal financial controls, and audit report. So these are the areas we will be touching upon today. I will try to finish everything by today itself. That one, Anisha, everyone, good morning. Yeah. So first is statutory audit, branch audit, joint audit, role of audit committee. And you have learned this in law, right? Law like statutory audit, like company audit, how to appoint auditor, rotate auditor, illa. No law is there. CMA law illa. And the appointment of auditor 139, 140, 141, a section illa. Audit committee is there, and this other one, appointment of auditor, remuneration of, nothing is there, right? Off. It's there. Auditor appointment. Okay, so basically, anyways, obviously, when you are learning CMA, that should be there in your things. Oh yeah, we'll learn from here also. So no, 1 second, on silently. Okay. So the first thing is, where is the pen? Statutory audit, like I told you yesterday, it's a mandatory audit. An audit which is conducted under a specific statute or an act may be called as a statutory audit. Normally, audit is mandatory for companies under Companies Act. So this statute is what we call Companies Act, law. So it is a mandatory. Management is separated. I will leave it. That's not an issue. Then, qualifications of an auditor. Who can become an auditor of a company? Who can become an auditor? First is only a qualified chartered accountant can become an auditor. A firm can also, there is a firm of chartered accountants. Chartered accountants operate in two ways. Either he is a sole proprietor, he only has himself in the office, or he may be partnered with another CA, that is CA firm. A firm can also be appointed by its firm name. If an individual chartered accountant is appointed, he is appointed in his name. And if a firm is appointed, it is appointed in his firm name. For example, ABC Associates, Mr. A, Mr. B, Mr. C, chartered accountants, the appointment is in his firm name. If the majority of its partners are practicing and are qualified for appointment. If there are 6 partners in a CA firm, majority, that means 3 plus, like at least 4 should be practicing CA itself. Then, where a firm including a limited liability partnership, that is, one thing I can ask you, can a CA form a company for practice? No, right? You know it, right? Okay. CA can only go with either a proprietorship firm or partnership or limited liability partnership, LLP. So, where a firm of, here, this is a case of a partnership, this is a case of LLP, where a firm including an LLP is appointed as the auditor of a company, only the partners who are chartered accountants shall act and sign. Sometimes chartered accountants, company secretary, everyone will be in the LLP firm they formed, but only those CAs can sign audit report. CS or CMA cannot sign the audit report. Act and sign. Then chartered accountants means any person who is a member of ICAI. A person is a member of institute if his name appears in the register. All the simple things, just read, it's not that much of importance for MCQ purpose only. I'll focus on the very important and complex areas where it's difficult for you to understand. Then disqualifications of the auditor. If auditor does any of these items, he cannot be appointed as auditor. And imagine I am working in a CA firm, no, I have a CA firm and I am appointed as the auditor of Mama Earth. If I did any of these things, I have to vacate the office. I have to go resign from my position as auditor. So these are the disqualifications. Following person shall not be eligible for appointment as auditor. This is very important, section 141(3). This disqualification in law, audit, everywhere it is important. Mostly you can get a question in either in MCQ or in descriptive. But in CMA, normally they won't ask you the case studies or something. They would just directly directly ask what are the disqualifications of auditor, something like that, because I've seen them asking like that. But if in other examinations it will be like indirect, a case study will be given and you have to identify whether he falls in any of these things and write accordingly. But in your exams it's very easy in terms of they'll directly ask this. Just study this directly and go. You can get marks. So first is a body corporate. A company cannot be appointed as a, I told you, like only LLP can be appointed, LLP and partnership. A body corporate cannot be appointed as a chartered accountant in a CA firm. Then an officer or employee of the company. Imagine Mamaearth is, today we'll take we'll take Zomato. Zomato is a company, right? In Zomato, the Zomato has officers or employees, right? They cannot be appointed as auditor, even though I'm a chartered accountant and I'm working in Zomato as some senior level manager. I cannot do the auditing. Or officer and employee of the company cannot do that. Then a person who is a partner or who is in employment of an officer or employee of the company. Imagine a person who is a partner or who is in employment of the officer of the company. Zomato has an officer and I am the employee of this officer. I cannot become the auditor of Zomato. Simply because in your common sense, just think like this. Anyone who can influence, because I told you auditor should be independent. So anyone who can influence the auditor cannot become an auditor. Simple as that. Auditor should not be influenced in any way. He should not be a friend, he should not be a relative, something like that. For example, a company is there and an employee, if an employee is auditing the company, he will not be independent. He will do, if this employee has done some fraud, he will cover it up, right? So that is, independence is needed. Then a person who is a relative or a partner, and a person who is a relative and partner, and this relative or partner and this is holding any security in the company or its subsidiary or of its holding or associate company, will from now on we'll treat this as cash, CASH. That means company, associate, subsidiary, H, cash. So it will be very easy for you. A person that is a CA or his relative or his CS partner is holding any security in the company, associate any company of face value exceeding 1 lakh rupees. CA or his partner or his relative. Imagine I am a CA. I have a partner, my CFO, my partner, me or my partner or any of my relative. If any of us is holding any shares or security or interest in Zomato, I cannot audit Zomato. Not only me. If my relative is holding an interest in Zomato, I cannot audit Zomato. Exceeding 1 lakh. Imagine the question will be, CA Sudarshan has a relative and his relative is holding shares in that company up of 60,000 rupees. Immediately sometimes you may write he is disqualified. No, up to 1 lakh you can hold. Up to 1 lakh you can hold. Just keep that in mind. Okay. Just do it like this. This is the main CA. CA, his relative or his partner cannot hold shares of up to 1 lakh, up to 1 lakh in the company. Simple as that. Then this person, that is CA, his relative or his partner is indebted to the company, that is cash, indebted to the company, that is company, subsidiary, holding, associated in excess of 5 lakh rupees. Imagine the CA, his partner or his relative. Anyone in this three should not be indebted to the company. That means we should not have taken any loan or we have taken any purchase, or ultimately there is 5 lakh rupees we should not owe to company. Up to 5 lakh it is fine. If it is more than 5 lakh, you are disqualified, like you or your partner or your relative. Indebted means you owe that much money to the company. Everyone knows, right, what is company, subsidiary, associate, holding, everything, right? Because I'm just asking, because I want like the smallest of the doubts you just ask me, like the foolish doubts. Still it's fine because we have to clear all those things, because that is where this lies. Then this people, CA, partner, relative, has given guarantee or provided any security with the indebtedness of any third person in excess of rupees 1 lakh for cash, like this company, associate, subsidiary. Okay. That is, I told you, the CA, partner, relative. I told you they should not be indebted to the company up to 5 lakh rupees. They should not have owned the company up to 5 lakh rupees. Now, What I'm saying is that what the people do is that either the CA or relative or partner, any of them sometimes may give guarantee for another person. There is some another friend of a CA or relative, so and friend wants something from the company. So the CA will say, yeah, in my guarantee give him 10 lakh rupee loan. So those kind of guarantee for a third person, indebtedness of a third person should not exceed 1 lakh rupees. Up to 1 lakh it is fine. If it is 80,000, 90,000, still you can become the auditor. If it is more than 90,000 or more than 1 lakh, you cannot become the auditor. You are disqualified. Then the CA thing, simple. I have written this short, so you don't have to, because this law language is difficult to interpret. We'll write it short. Then I'll teach you how it is. Then a person or a firm. This is another point. Okay, this much is only, D point is only this much. This is E. A person or a firm, that is a CA or a CA firm, who whether directly or indirectly has business relationship with the company. CA firm is there and the CA firm has a direct business relationship with this company. We are doing business together. So I should not become the auditor of the company, because if I become the auditor of the company, this whatever business we are doing together, that business money will be there in the financial statements, right? And if I am auditing the same financial statements, will I be true? I'll never be true. I'll show bias. So business relationship means professional services permitted to be rendered by an audit, except, not just read it. Then one more thing, business relationship except means the CA or his CA firm should not do any business relationship with the company. If they are having any business relationship, the CA or CA firm cannot become the auditor. They are disqualified. Okay. Now these are the two business things which we can do, except that these are the business relationship we can have. First is professional services permitted to be rendered by the auditor, because anyways this is a CA firm. I may be giving some consulting services, etc. That should not mean I'm excluded. I can give my professional services, I can give. Other business relationship I cannot do. And one more thing, companies, products or services, commercial transactions in the ordinary course of business at arm's length price. For example, this company is a car showroom, like a Toyota car showroom, and I am the auditor of Toyota car showroom. I wanted to buy an Innova, Toyota Innova. I go to my showroom and buy it. That is not a business relationship, because the normal transaction is happening. I buy it at the exact price where Toyota is selling to normal people. If I am buying at the same price, no discount, anything, it is not a business relationship. It's arm's length price. Arm's length price means the price at which these products are offered to everyone. No discount separate for me. Then a person who is a relative, because these things you have to understand properly, else it will become complicated, because they can easily make questions from this. A person who is whose relative is a director or is in employment as a director or key managerial person of the company. I am a CA, my relative is there, my brother or something. My brother is a director in that company. So I cannot become the auditor, because this director may have done some fraud or something. If he is my brother, right? So I'll never give a good opinion in audit report. Then a person who is in full employment elsewhere, or a person, imagine as CA, I am a CA, I am now in full employment here. I cannot become an auditor in a different company. Simple. Then a person or a partner of a firm holding appointment as an auditor, if such person or partner at the date of appointment holding appointment audit of more than 20 companies. Don't complicate like this. I have written it in a simple language, so it will be easy for you to understand. First, a person who is in employment elsewhere cannot become the auditor. Okay. Next is a person, I'm a CA or I'm having a CA firm. There is a rule that the CA can only do audit, statutory audit of 20 companies. If as on, for example, Mama Earth approached me to become their auditor, and on that date, I'm already auditing 20 companies. So I cannot audit Mama Earth. That is what is written here. A person, that is a partner or a partner in CA firm, holding appointment on the date of such appointment of more than 20 companies. I'm the auditor of more than 20 companies, so I cannot audit this company. Only 20 is the maximum limit I can do. Then Anisha, audit committee and appointment release. Okay. I understood, Deepthi. So we'll teach you 100%. Don't worry. Okay. Then a person who has been convicted by any court for offense of fraud and a period of 10 years has not elapsed. For example, in 20 2016, an auditor was convicted by court for any fraudulent activity or something, and 10 years, it's now 2025. Now 10 years has not elapsed, right? Elapsed means 10 years is not over. So if 10 years is over, he can be appointed. So if it is, imagine if it is 2014, 10 years is over, he can be appointed. If it is 2016, 10 years is not over, he cannot be appointed. Then a person who directly or indirectly render any service referred to in 144, that is these services. If an auditor is giving these services to a company, he cannot become the auditor. That is, if the auditor is providing the accounting or bookkeeping services, internal audit services, actuarial service, design and implementation of financial information, investment advisory. If auditor is providing any of these services, he cannot become the statutory auditor. I want you to, now when you are listening, you will understand all these things. But when you go home, you may forget what the hell is written here. So whatever you feel tough, write it in your mother tongue or your language to the side of the book. So after 1 month, if you are revising, you will get it. Then, where a person appointed as an auditor incurs any of the disqualification mentioned above, he shall vacate the office, and such vacation is what we call a casual vacancy. As of now, I am the auditor of Mama Earth, but now I am the auditor. I have already got appointed as the auditor, and 3 months, after 3 months, my brother bought shares in that company for 2 lakh rupees. I told you up to 1 lakh only we can buy. He bought 2 lakh rupees. As of now, I am the auditor. He never told me, and he also don't know that I am the auditor of this company. But after 2 days, there was a family meeting. He told me I bought shares of Mama Earth 2 lakh. Now he is my brother. I cannot become the auditor. I cannot be in the position of the auditor. Immediately, next day itself, I have to go to Mama Earth, say that my brother is holding share, so I am vacating the office. And that vacation, the auditor, the seat of auditor was there. He now exited. This vacancy is what we call casual vacancy. Casual vacancy. Okay. Okay. Now we'll go with the simple stuff. Now we'll understand. Because learning from this language and writing is very tough for you. Just use this and write it in your language. Because you can write it in your language. Only thing is, when there is a company associated holding a subsidiary like CASH, don't forget to write cash. It's simple as that. I'll just simply explain. Now just look at this. If you want, you can take a screenshot or write or something, or I'll provide you the board notes in Telegram. Because today, lot of notes like this I've prepared for different areas. For example, remuneration, removal, all those areas. So either you can write it down in the near of your textbook if you want, or I can provide these board notes in the Telegram like a PDF. You can go home and write whatever it is comfortable. So a body corporate cannot become the auditor. Indu cannot become the auditor. LLP can become the auditor. Simple as that. This is only what you have to understand. Employee or officer of the company cannot become the auditor. Employee or partner of this officer or company, employee or partner of these people cannot become the auditor. Then auditor, auditor's relative, auditor's partner cannot become the auditor if they hold a security of face value greater than 1 lakh. It is actually face value. Do always remember this one thing. In question, they will give you market value. Take face value only. Okay. If they hold a face value of greater than 1 lakh, they are disqualified. Indebted greater than 5 lakh, they are disqualified. Guarantee security for any third party greater than 1 lakh, they are disqualified. Remember, it is of cash. I am the auditor of Zomato, and my relative is holding not holding shares in Zomato. My relative is holding shares in Blinkit. Blinkit is also like a subsidiary of Zomato. I don't know whether it is actual subsidiary, but ownership is the same. Both people are owning the same. So I am the auditor of Zomato, and my relative is having shares in Blinkit. Imagine Blinkit is a subsidiary of Zomato. So I cannot become the auditor because I told you it's not only company, it's associate company, subsidiary company, or holding company. If my relative is holding shares in anywhere like company, associate, subsidiary, holding, I will be disqualified. Then auditor or his firm has business relationship with the company, he is disqualified. Auditor, his relative is a director or key managerial person. I am auditor, my brother is a director in that company or key managerial person, I cannot become the auditor. Then CA who is in full-time job elsewhere. I am a CA, I am a full-time job here, I cannot become the auditor. CA who is auditor of more than 20 companies cannot become the auditor. CA who is convicted of fraud and 10 years has not elapsed cannot become the auditor. CA giving service as per services mentioned in section 144 to company holding subsidiary Here associate is not there. Remember in mind, associate is not there. See, let me see, associate is there. Cross check. Here under no associate is there. No associate. So if they want to give a tough question paper, they'll give this scenario and mention an associate company. So you will immediately write it answer as disqualified, but for associate you can provide services, no problem. Okay, then if auditor gets any disqualification mentioned above, vacate his office. Simple as that. These are, and guys who are attending it from on YouTube, if you want, you can take a screenshot and you can write it later when you get time, or pause and write. That is enough. Okay, so you understood the disqualifications, right? And study disqualifications from this only. From this, you understand first from the book, then revise it from this, else it will be very hard. The law language is very hard to retain. Okay, you want me to pause it? You are writing. Okay, done. Bottom. Sir, we have to write as it is in book in exam. Yes, I understood that, but I'm saying when you learn like what I've said, employee, officer of the company, you just write an officer or employee of the company is disqualified if a CA or CA is an auditor, CA is an officer or employee of the company, he is disqualified to be appointed. You can write it in your language, not this technical phrases is what I'm asking you to exclude. That is here to, thereby, all these things. Just understand the meaning and write it. You will get marks. Don't worry. Not in the exact language, law language, you cannot write. Just use this to revise and replicate in like a 70% or 60% similar to what is written in the books. That's it. Okay, right. Plot it. Done. For example, like Meenu asked how to write this in your own language. I'll say just this one we'll take. A person or his relative or his partner, that you can write. Then he's holding any shares in the cash. He's holding any shares in cash means company, associate, subsidiary or holding company. He's holding any shares in cash of value greater than 1 lakh rupee. You write it in like that, not like this. He's holding any security of interest, like security you write it, not shares, security of interest, security or interest in the company, associate, subsidiary, holding company of face value not exceeding 1 lakh. In that you can write of face value. If he is holding more than 1 lakh rupee, he is disqualified. Simple as that. Okay, so this one is also done. Then this, please keep in mind, sometimes they can ask you what are the services auditor can provide other than auditing as per section 144. These are the services which auditor cannot provide. Auditor cannot provide this service. If he is providing these services, he cannot become the auditor. Mostly if you have done an articleship in a mid-size firm or a smaller firm, your internship, you can see their accounting, bookkeeping, everything is done by the auditor itself of a company. Like smaller companies, they may have a accountant for 15,000 rupees. He may not know how to do all these works. So basically this auditor itself will do the accounting, everything of that happens, but actually we should not do, because just see, we are preparing the accounts and we are auditing the accounts. What is the relevance in that? Account should be prepared by a person and we should only check it. That's it. Internal audit also, if you are the internal auditor, you cannot be the statutory auditor. I told you, right? Then appointment of company auditor. This chart is so good. Your book perfect. Everything is perfect in this book. Just study it from. You don't need any extra book for auditing. I don't know how the other chapters are, but other subjects are. Appointment of a company auditor. I'll explain this, and anyways this live will be there on YouTube also. When you are studying, if you find something difficult, you can go to that YouTube and take that portion. You'll understand. Anyways, we are teaching in the order itself, so it will be easy. Appointment of the company auditor. Who can appoint the auditor? How appointment done? Appointment in the normal course. Appointment of the first auditor. A company incorporated. Zomato was started in 2014. Now, first auditor of the company, how are we going to appoint? First auditor for a company other than a government company. That is normal case. Normal companies, the first auditor is appointed by the board of directors. Is appointed by the board of directors in 30 days of registration, within 30 days of registration. Company was registered on, for example, May 1st, within the next 30 days, before June 1st, he need to appoint the board of directors need to appoint the auditor, first auditor. If board of directors fail, they did not appoint the auditor, then the auditor need to be appointed by auditor need to be appointed by the members at extraordinary general meeting in the next 90 days. 90 days. 30 days are over, then 90 days, members need to appoint the auditor if board of director fails. That is the only thing. And the auditor so appointed can hold the office. That means he can become the auditor till the first AGM, first annual general meeting of the company. So you got it right. First auditor appointed for a normal company, appointed by the board of directors within 30 days of registration of the company. If board fails, it should be appointed by members at extraordinary general meeting in 90 days. Then such auditor can hold the office, that he can become the auditor, he can stay as the auditor till the conclusion of first annual general meeting. Then in case of a government company, government company we will do later. This is the first auditor of a normal company, and first year auditor is done, first year is over. Now the subsequent auditors for other years, future years. For subsequent auditor for a company, that is appointment of a subsequent auditor for a normal company. This is a normal company. Appointment of a subsequent auditor is done by the company at annual general meeting by the members. It's visible, right? This is a maximum I can zoom. By the company at AGM by the members. First auditor was appointed by board of directors. In other cases, in the future, all the other auditors coming in are appointed by the members itself, members of the company. The shareholders, the guys will be appointing them. Then such auditor shall hold the office till the conclusion of the 6th AGM. 6th AGM, because first AGM is already over. So now for basically for 5 years, he is appointed for 5 years. Then before appointing, the written consent and a certificate of the auditor you need to obtain. That is, before appointing the auditor has to give the consent, right? I am just to inform the auditor, we want to appoint you, and we are in the shareholders meeting, we are deciding this. And once your appointment is done, obtain written consent from them, consent from his. That is, he is ready to be appointed as the auditor, because in future, what if he says, I don't want your appointment? Meeting is also over. So they have to do another meeting to appoint another auditor. So because of that reason, obtain a written consent from the auditor, and in that also a certificate also from the auditor that he is not disqualified to be appointed. Because when we inform him, become the auditor of Zomato or Mama-Earth, he is the one who need to check whether his relative is holding shares in the company, all the disqualifications we mentioned. So after checking all this, he'll, in a piece of paper, he'll write, okay, I am CA Sudarshan Ilnath, I would love to take the opportunity to become your auditor. In the written consent, he'll give it. So then in ADT1, file the ADT1, that is notice of appointment. ADT1 is like a form in income tax. It's just a form where, as per the MCA, Ministry of Corporate Affairs, just a form where other things are there. When an auditor is appointed, company has to fill this form, like name of the auditor, name of the company, for how many years he is appointed, all these things, and file to the registrar. ADT1, that is what we call the notice of appointment, within 15 days of the meeting. The meeting of appointment was done on, imagine, August. So within the next 15 days, company need to file this ADT1 to the registrar. Got it, right? Do you need any explanation on more? Got this one, right? Then this is the case of normal company. In the case of a normal company, first auditor appointed by the board of directors within 30 days of registration of the company, and if board fails, by the members in 90 days, and he shall hold the office till the conclusion of first AGM. Then subsequent auditor, in the future auditor, first auditor is gone, subsequent auditor, coming auditors appointed by the members at AGM, annual general meeting, they are appointed, and they shall hold the office till the conclusion of 6th AGM, that is 5 years that he can be in the office. Then written consent also should be taken from the auditor. Once auditor is appointed, from that meeting date, in the next 15 days, file ADT1, notice of appointment to the registrar. So this is the case of normal auditor. This is normal auditor. This is also normal auditor. Now we will look at government auditor, government cases. Appointment of the first auditor of the government. First auditor of the government company. A government company, first auditor is appointed by the Controller and Auditor General of India in 60 days of registration. Within 60 days of registration. Company registered on April 1, within 2 months, that is 60 days, C&AG need to appoint, Controller and Auditor General need to appoint first auditor. If Controller and Auditor General fails, board will appoint it in the next 30 days. If board fails, member will appoint it in the next 60 days. Okay, got it, like 60, 30, 60, 60, 30, 60, keep it like that. Then this person can hold the office till the conclusion of first AGM. Same as here also first AGM, here also first AGM. First auditor only till first AGM in both cases. In future, the subsequent auditors of government company appointed by the C&AG within 180 days of commencement of the year. That is future auditor. First, the company was registered on 2021. First auditor was appointed in the next year. It is 2022-23. That year, the subsequent auditor should be appointed by the C&AG within 180 days from commencement of the year. That is from 1st April. 1st April is the commencement of the year, right? Accounting year. From 1st April, in the next 180 days, auditor need to be appointed. Okay, and he shall hold the office till the conclusion of that only year AGM. That is one thing you have to keep in mind. For government company, auditor shall hold the office only for that 1 year till the conclusion of first AGM. In normal cases, 6th AGM where he can hold the office. But in government company, 1 year, 1 auditor. 1 year, 1 auditor. This is appointment of auditor in normal course. For a normal company, normal course. This is what we call a casual vacancy. A casual vacancy means an auditor was already appointed. But what happened was, he died. Or because of some fraud or disqualification, he vacated the office and go. In that case is what we call a casual vacancy. So in such a kind of a case, how we need to appoint an auditor? For the company other than government company, that is normal case, it will be appointed by the board of directors in 30 days. Board of directors in 30 days. Casual vacancy, a normal auditor was appointed, but 3 months after he died. So casual vacancy occurred on, for example, he died on 21st August. So in the next 30 days, 21st September, within that date, board of directors will appoint the new auditor. Then if that casual vacancy was because of resignation, RESGN means resignation, that is casual vacancy can occur from disqualification, that auditor's brother hold a share, so he vacated the office. It can occur from death, he died, so it occurs. But if that casual vacancy is because of resignation, the auditor resigned and go. That can also occur because auditor identified some fraud in the company, he don't want to sign the company, he resigned and go. In that case, also, casual vacancy, auditor need to be appointed by the board of directors in the next 30 days. But in that case, such a new auditor also requires the members' approval also. When an auditor is appointed, the members need to give an approval in the next 30 days. First 30 days, board of director will appoint the auditor. Next 30 days, members need to give an approval. That is, it's okay. And also, he can hold the office till the conclusion of next AGM only. Then for government companies, casual vacancy filled by the C&AG in 30 days or C&AG fails by the board of directors in the next 30 days. Simple as that. So, I'm going to take photo, yeah. But screenshot, okay. Like you can, is it visible? Again, if you want, you can come here and take. No, it's visible. I'll give you this PDF sometimes if you want. This marked PDF I can give. So it will be easy for you. So that is what is written here, like this. Fulla. The same things are written here. You can just read it and you will understand whatever I have taught you. And this language is may be difficult for you to understand. So I explained it through a chart, very easy. So once you have this chart, you just go and read it. You will easily understand what is written here. Then reappointment of the company auditor. That is another case. Reappointment. As per section 139N, In case of section, don't quote a section if you are not 100% sure. If they ask you about appointment and you quote a different section, even if the answer is correct, they'll cut your marks. So only write section number in examination if you are only 100% sure that section is correct. And you know the section number, but you don't know the subsection, 139 or something, no problem, just write 139, no problem. Subsection don't write. That is okay, fine, still they'll give you marks, but don't write a wrong section. As per 139, a retiring auditor may be reappointed at annual general meeting. That is, I told you the first auditor or the auditor can hold the office till the next AGM, 6th AGM. So that AGM came and his term is over. So that same auditor itself can be reappointed in the following cases if he is not disqualified. And one more thing, it's the 5-year term is not what I am saying. An auditor can hold the office only for 5 years. If it's an audit firm, he can hold the office for 10 years. That is 2 term of 5-5. That is what we call that we'll discuss there. Now this is the case of in alternate year. First year, an auditor was appointed for that 1 year. Next year, if the company wants, he can change. Or this auditor itself can hold it for the next 5 years also. That means if an auditor was appointed at 2022, 23, this year he can hold the office for the next 5 years. That's 23, 24, 25, 26, 27, 28, 29 AGM or something. Till that he can hold the office. So in these 5 years also, if the company want to remove him here, company can remove him. Company can appoint a new auditor. If auditor want to go, also he can go. But in every year he needs to be reappointed. An auditor is only appointed for 1 year. Next year also, this guy need to be reappointed. This guy need to be reappointed. This guy need to be reappointed. So this reappointment, that is, a retiring auditor may be reappointed at annual general meeting if he should not be disqualified. If he is disqualified in the next year, he cannot be appointed. He has not given the company a notice in writing of his unwillingness. That is, after 2 years, auditor in a paper write, I am not interested to join your company. Please don't reappoint me. So he cannot be reappointed. That is, he should not have given the company a notice in writing of his unwillingness to be reappointed. He don't want to be reappointed. If he gives such kind of a notice, he cannot be reappointed. So that's it. Then a special resolution has not been passed at that meeting appointing some other auditor or providing expressly that he shall not be appointed in that annual general meeting. Last 1 year he was the auditor. So either this shareholders, the members can appoint him, or a new auditor also they want. If they want, they can appoint. And in this meeting, the shareholders decided, we don't want him. We want a new auditor. So they appointed a new auditor. If they appointed a new auditor, this cannot be, he cannot be, the old person cannot become the auditor, right? That's what is written here. And or another thing, if the shareholders has some issue with that auditor, the normal auditor, then they may decide, we should not appoint him as the auditor. If they decide like that also, he should not become the auditor. So in these cases, he cannot become the auditor. If these 3 cases are not there, this person itself can become the auditor. Okay. Then automatic reappointment, where at the annual general meeting, no auditor is appointed or reappointed, existing auditor shall continue to become the auditor. Auditor was appointed in first year, not first year, like 2021. For the next 5 years, he can be appointed. In the second year annual general meeting, they had not even decided about the auditor. They simply talked about other things and finalized the meeting and go. In that case, the auditor itself is reappointed as auditor. It's thinking like that. Then role of audit committee in recommendation of appointment of auditor. If the company has an audit committee, 2 options are there. Only bigger companies will have this audit committee. If they have an audit committee, the power of audit committee is that they will take care of everything related to audit. So they will identify who is the best auditor in city for our company, and they will recommend a name to the board, and board will recommend it to the shareholders. If there is an audit committee in the company, if there is no audit committee, board itself will find an auditor and recommend it to the board. That is how it works. Where a company is required to constitute an audit committee, all appointments of auditors, including the filing of casual vacancy also, shall be made after taking into account the recommendations of such committee. Then ceiling of number of audit assignment. How much audit an auditor can do? I told you 20 audits per auditor. One auditor can do 20 audits. If there is an audit firm of 4 auditors, how many audits can they do? That firm. Just think, man, it's not a compliment. 80. Simple as that. Yeah, that's it. A person or a partner in a firm shall not be eligible for appointment as an auditor of a company if he is in full-time employment elsewhere, if he is a partner of date of appointment more than like these companies we told you. In case of proprietorship, such person or a partner has at the date of appointment holding appointment as auditor of more than 20 companies. Only 20 companies we can hold. And in that 20 company list, these things are excluded. That is, one-person companies, dormant companies, small companies, private company having paid up share capital of less than 100 crore. This is very, very, very important. I told you a CA, a single CA can be auditor of 20 companies. These company exclude one-person company, dormant company, what was the other things? Small companies, small company, and a private limited company whose paid up share capital is less than or equal to 100 crore. Paid up share capital less than 100 crore, not equal to, less than 100. Less than 100 crore. That is, imagine a CA is there, and I'll give you a question. A CA is there, he is the auditor of 15 private limited companies having a paid up share capital of imagine 200 crores or something, bigger companies. And he is also auditor of 2 listed companies, just keep in mind, 2 listed companies. He is auditor of 15 private limited company with a paid up share capital greater than 100 crore, like a bigger companies. And he is also the auditor of 3 listed company, bigger companies. He is also the auditor of 3 dormant company, 2 small company. So the total is 15 plus 3 plus 3, 3 plus 3, 6 plus 2, 8, 15 plus 8, oh, max of 23. Yeah. Now he is the auditor of 23 company. Is it valid or not? Yes, because only these 2 will be counted. This is not counted because dormant company and small company is not counted. And he is also the auditor of, imagine, say 10 private company whose share capital less than 100 crore. So now it becomes 33. Still it is valid because these are excluded limits. Keep in mind. Okay. You are understanding it, right? 80. Anisha, you are like attentive. So good. So happy to see that. Because I checked the message a bit late. Sorry. You are understanding its things, right? Understanding this clearly. Then following points shall be kept in mind regarding this. Every qualified chartered accountant who is not in a full-time employment can become the auditor of maximum 20 company. I told you, same. So in a partnership firm, the limit is according to the partner. 3 partners, 60. 8 partners, 8 into 20, 160, something. Then while computing the ceiling limit, this limit of 20 companies, a partner with a full-time employment elsewhere should not be taken into account. Simple example, there are 3 partners in a CA firm. 2 partners are active partners. There are other thing, 3 are chartered accountants, but 2 are actual active partners, but the other partner is working in teaching or something. He is active elsewhere, employment in some other places. So when you are calculating the limit, only include the 20 of the only 10, 20, 20, not only 40. The other person should not be included because he is working somewhere else. Even though he is a partner, his limit should not be included. Because I'll tell you why they have mentioned like this. In Kerala, like in many of the offices, I have seen this. Many CAs are there. For example, I am a CA and I will take the COP, certificate of practice. Then only I can sign. Then what I will do is that I will not do any audit firm or something. I got many offers like that when I cleared CA. They told me like I can pay you 50,000 per month or 1 lakh, nearly 50, 70,000 per audit report you sign. They will pay me 20, 30,000, 20,000, 25,000. They told me like this. Like the thing is, just you have to take the membership, you have to take the certificate of practice, and you can do your business, teaching, whatever it is. But they will include me as a partner in their firm. I'll be working somewhere else. So the thing is, now they can take another extra 20 audits in my name. There may be only 2 partners will be there, so they can only sign 40 audits. But if they include me, another 20 also they'll get. I may not be working somewhere, and per audit they'll be charging 1 lakh fee, and they'll give 20,000 to me just for signing. If I trust them, I can do that. There is not a problem. But I told I don't want to do that because ethics is above all this. I don't want to take a risk because sometimes some dormant, some fraud company or something. I'm not auditing it, right? I'll sign what they say, and 10 years after a case will be against me. I don't want to be taking the risk. 30,000 I'll aram say and from conducting a batch more. So if any chartered accountant is a partner in a number of audit firms, one CA, I am a CA holding practice, I am a partner in this firm, this firm, this firm, many firms I am a partner, then all the firms taken together will be entitled to 20 only, because I can only have 20 audits. If I am a partner in 3 audit firms, this should be divided. I will not get 20, 20, 20, no, only 20 is there. I can give it like 7 for this, 8 for this, and another 2 or 3 for other company, other firm. Similarly, if a CA is practicing individually and is also a partner in other firms, still limit is 20. I am a sole proprietor, I am a sole practitioner of CA, and I am also a partner in other company. Whatever happens, my limit is 20. An individual can only sign 20. Just keep in mind, wherever partner he is, altogether he can only sign 20. MCQ they can ask this. Then, while calculating the above ceiling limit, a joint audit assignment will be taken as 1 unit. Joint auditor, like 3 auditors are for one auditing for one company, it will be taken as only one audit. Then moreover, if an auditor is appointed to audit even a part of the company's account, it will be considered as 1 audit. I am auditing just only 30% of the audit of one company. Still, 1 audit is counting my name. Then every auditor as an individual or as a partner can accept maximum of 60 tax audit assignment. This is different. 20 is statutory audit, the mandatory audit, Companies Act. That is a 20. As per Income Tax Act, you can take 60 tax audits. Just keep in mind, 20 is for statutory audit, 60 is for income tax audit, Then if a chartered accountant holds more appointment than this, he is guilty of professional misconduct. Simple. Then resignation by the auditor. Auditor want to resign from the company. Maybe because of some fraud or some issues he want to resign from the company. What should he do? Just do this thing. You don't have to read this much. Law, this is actually law chapter. Law chapter, you learn it like this, because and replicate in your language mostly. It's not a problem. Just 70% similar to the institute's material language. That's it. Thus, if you are resigning, file a form called ADT3. That is a form when we resign, we file, auditor files. File a form called ADT3 to the ROC. ROC means Register of Companies, and the companies, if it's a non-government company. I'll show it to you. For example, if an auditor is resigning from the company because of any issue, he is resigning, file ADT3. Auditor need to file this form. File ADT3 if it is a non-government company. That is a normal company. Then auditor need to file this ADT3 to first to the company itself. You need to file it to the company itself, plus Register of Companies, ROC, Registrar of Companies. You need to file within 30 days. Within 30 days, he resigned on July 1st. Before August 1st, he need to file this. Then if it's a government company, file it to company itself first, plus CAG, Controller and Auditor General of India. Simple as that. Got it right? It's very easy. If it's a non-government company, to these people. If it's a government company, to these people in 30 days. 30 days of resignation. This is auditor he need to file it. Okay. Then that is what is written here. And one more thing, if auditor does not comply with any of the provisions above, that is, he does not file the ADT3 or anything, he does not file the forms, he shall be punishable with a fine of 50,000 rupees or an amount equal to the remuneration of the auditor, whichever is less. 50,000 or his remuneration. Imagine his remuneration was 1 lakh. So whichever is less, 50,000 is less. So his fine will be 50,000. And in case of continuing failure, he has 30 days are over. He should file ADT3 in 30 days. but he forgot to file it, ADT3. So after 30 days, its failure is continuing, right? He has not even filed it yet. So for every day of continuing failure, with a further penalty of 500 rupees for each day. So he resigned on 1st June. So by 1st July, at least he need to file ADT3. So he filed it only on 18th July. So first 1 month, it's not a problem. After this, 18 days he forgot to file. So 18 days he need to pay 500 rupees each. 50,000 penalty is there. Plus 18 into 500 he has to pay. That is like 9,000 or something he has to pay. For each day after the first during the failure continues, subject to a maximum of 2 lakh limits, 2 lakh rupees only. Because imagine he filed it only on, I'm giving you practical examples because I don't know if MCQ comes in, it will be easy. For if they want to make the paper tough, they'll give it. Else it's like a very easy paper normally. So if he only filed it in, imagine December, that is our 6 months, 7 months is over, and not December next year, forgot, this year also next year, December, this is on 21, this is in December 22 only he filed. So obviously this 500 rupees into every day means like around bigger days are come. So sometimes it may be above 2 lakh rupees. So the maximum fine will be 2 lakh in that case. Then rotation of auditor. Rotation of auditor means company need to change the auditors, rotate the auditors, because if a same auditor is auditing the company for many years, what will happen is that he will become really good friends with the accountant, because every year he is seeing the accountant. So first year he may be strict, but when it comes to the next year, he may be a bit lazy, or he may become really good friends with accountant. If there is any fraud or something, he may just close his eyes and leave it. So that happens. So that is why we need a rotation of company auditor. Rotation should be there. Any of you is working in a firm? No, right? Everyone is just sitting at home and studying. I just thought, because some students yesterday, like they were working in a firm, right? So they came and everyone was asking. Okay. So the next is rotation of an auditor. Rotation of auditor. Provision of companies. Okay. The provision of rotation of auditor shall be applicable to every listed company need to rotate the auditors. Every listed company except one-person company, small companies. Then unlisted public company having paid up share capital greater than 10 crore need to rotate the auditors. Private limited company with a paid up share capital greater than 50 crore need to rotate the auditor. Any other companies which is not included in these three, whose borrowings or deposits are greater than 50 crore need to rotate the auditors. So maximum term, an individual shall be appointed as an auditor only for 5 years. I am an individual CA. I got audited in Zomato. I can only be the auditor in Zomato for the next 5 years only. After 5 years, it's mandatory that company should leave me. Even if I am a really good auditor, still after 5 years, they need to change it to a new auditor. This is the case when I am a normal single auditor. Imagine I am an audit firm. Single auditor means I am running a CA practice, just me only, no partners are there. If it's a CA firm where 2 or 3 partners are there, in that case, they can hold the office, they can become the auditor for 10 years. 10 years also in like 5 years is one term, 5 years is another term. One term of 5 years, next one term also they can be appointed. Keep that in mind. This is a term of appointment. Additional condition, an individual auditor or an audit firm who has completed his term, that is 5 years has been completed, or firm 10 years has been completed, shall not be eligible for reappointment for the next 5 years from the completion of such a firm. That is, imagine I was the auditor here, I was appointed at imagine 21, so till 26, this is a 5 years, I can become the auditor. And here they removed me from the auditor because only 5 years I can do. But imagine in 29, can I become the auditor again? In 3 years is gone. In 29, can I become the auditor? No. If you have been removed, there is a cooling period of 5 years. Cooling period means if you have been removed in 26 till 31, you cannot be appointed. That is 5 years, one term you can appoint. If you are removed for the next 5 years, you cannot be appointed in that same company. And in case of partnership, the firms, the audit firms, the limit will be auditor was appointed at 21 till 26. First term he can be appointed 5 years. Then till 31 also the firm can be appointed another 5 years. But in 31 the firm is should be removed because 10 years is gone, right? So in from 31 till 36, 5 years the firm also cannot be appointed, the same company. Then on the date of appointment, no audit firm having a common partner or partners to other audit firm whose tenure has expired in the company shall be appointed for the period of 5 years. Simple. You understood this? You know that. You have studied it in law, right? In CA Inter, right? That thing is there. For example, there is a CA firm, and I am the audit. This is a CA firm, and for the last two, here we have two partners are there in CA firm. A and B is there. For the 5 years, 5 years. That is total 10 years. We were the auditor of Zomato. This is Zomato. We were the auditor of Zomato. So after 10 years, a new audit firm need to be appointed, right? So they appointed this firm is what we call AB Associates, and they appointed a new firm called CD Associates. Appointed a new firm here called CD Associates for the next 5 years. But the problem is that the CD Associates have three partners. One is C, one is D. This is CD, but the other partner, silent partner, is this one called B. This cannot be done because B is a partner in an audit firm which has been removed. So if he is a partner in another audit firm, that firm also cannot be appointed. Keep in mind. The above provision shall not prejudice to the rights of the company to remove an auditor. All these provisions does not prohibit the company from removing him. If the company want to remove him before that, they can remove him. 5 years I told you, but after 3 years company want to remove him, no problem. Auditor also, if the auditor want to go, he can also go before the 5 years. Then rotation of partners in audit firm. Member of a company may resolve to provide that audit firm appointed by it, auditing partner and his team shall be rotated at such intervals. Audit shall be conducted by more than one auditor. Simply, for example, a bigger company like Zomato, and the auditor is Deloitte. Imagine Deloitte is the auditor. Deloitte may have thousands of chartered accountants doing the audits. But the problem is that Mr. Adi, just imagine his name is Mr. Adi, and he is the auditor of Deloitte. He is from Deloitte. He is the auditor of this one, Zomato, in 2022. Next year also, this guy may be coming for audit because he is anyways working in Deloitte. Next year also maybe the same guy itself coming. But if Zomato don't like that guy, Zomato can request this company because last 2 years Adi was coming and now I think Adi is friends with our accountant. So send another person from same Deloitte itself. Deloitte itself is the auditor. Send another auditor from Deloitte. Company wants, Zomato wants, Devinder Goyal, CEO of Zomato, can request like that. The shareholders of Zomato, basically, he is also shareholder. And he can also say, Zomato is a very big company. Can you send 2 auditors? Now only one auditor is coming. Adi is coming. Send one more person with him. He can also request like that. Then manner of rotation. How this rotation happens. Where a company is required to constitute an audit committee. Bigger companies have audit committee. If company has audit committee shall recommend to the board name of auditor who may replace the auditor. That is 5 years one auditor is there. Another 5 years another auditor should come, right? So here, if audit committee is there, he will recommend the name to the board. Who is the new auditor? If no audit committee is there, board itself will recommend it. That's it. Then incoming auditor or the audit firm shall not be eligible if such auditor or audit firm is associated with the outgoing auditor. Like I told you, a CF, like this example. Same example, like if B is partner in this, he cannot audit. Similarly, there is one more thing. Here B is not a partner. Just think B is not a partner. C and D. So obviously C and D can be appointed, right? But there is one problem. There is these two firms are actually network firms. Network firm means branch, because this ABCD, it's actually a bigger firm called ABCD. It's a 4 partner, very big firm. They have branches in Coimbatore, Chennai, everything. So in that case, both these companies are under the group of ABCD. So he also cannot become auditor because they are network firms, they are related firms, they are different branches. Okay, they cannot be the auditor. So example, 5 years the audit was done by, simple example I can give to you, Zomato's 5 years audit was done by Deloitte in Delhi. So obviously it's a CA firm, so obviously 10 years they can do the audit. 10 years done was Deloitte Delhi. So after 10 years need to be changed, right? So Deloitte Gurgaon cannot come and do the audit, or Deloitte Tamil Nadu cannot come and do the audit because Deloitte is a partner firm. KPMG can come and do the audit, other firm. Okay, these branches, partner firms cannot do the audit. Then this also we discussed. I'm moving very fast. Remuneration of the company auditor. Remuneration of the auditor shall be fixed in the annual general meeting. Money we need to give. Shareholders will fix it in the annual general meeting. Members, however, the board may fix remuneration for the first auditor. First auditor's remuneration, first auditor is appointed by the board. Remuneration also given by the fixed by the board. Similarly, other auditors, it is fixed in the annual general meeting by the members. Then above remuneration shall be in addition to the fee payable to the auditor and shall include his expenses. When auditor is coming to audit THARUN'S Brainery, we will take him a hotel there for 10 days. Hotel we will provide the traveling expenditure. So this remuneration excludes all this traveling expenditure. Remuneration you have to anyway pay, plus you have to pay the traveling expenditure also. That's it. Other services also cannot be included. Then removal of the company auditor. If you want to remove the company auditor, what do you need to do? Remove. Don't worry, I'll give you the break in next 10-15 minutes. We'll just finish this topic and we'll give you the break. Rights and duties are all these things are very easy. Only this much is a bit complicated area where you need guidance, like short notes, everything. Other things are very easy. Something I have made a note. Where was it? Some bigger things I've made a note. What was it for this chapter? Yeah, this one. That is for cost audit. Because that will be more important for you, cost audit, because you are anyways cost auditors. So obviously that will become more important. Then removal of the auditor. Removal of the auditor, company want to remove the auditor. Two options is there. First is company itself is removing the auditor. Before 5 years he can be appointed, right? Or 10 years for audit firm. Before the term of 5 years, company is planning to remove. That is first case. Second case is auditor is removed by the tribunal itself. Tribunal means like just imagine like a court. You know it, just like a court, an upper authority. Two cases. If the company want to remove the auditor, what is the process? We are learning that. And if the tribunal is removing the auditor, what will happen? Two cases. Just giving you the clarity. So this will be the removal process in case of company is removing. If company is removing the auditor before his term, expiry of his term of 5 years, this will be the process. First, the company want to do a board resolution. Rather than learning it from here, this will be very easy. Removal process. First, the company need to board meeting. All the board of directors will come, sit in the meeting and we will discuss this auditor is a fool. He is not doing any good audit. So we want to remove him. So everyone directors will agree, the majority agree. They will sign and pass a board resolution first. And once the board resolution is passed, in the next 30 days, board resolution is passed on 1st June. So before 1st July, you need to give an application to the central government in a form called ADT2. It is like a form. If you want to get some form from the government, you will apply it in a form, right? Some certificate from the government. Similarly, ADT2 is also a form. Like auditor's name, who is need to be removed, why he reasons, everything. You will apply to central government in 30 days. And after that, you will get the approval of the central government. When you receive the approval, okay, you can remove the auditor. Then in the next 60 days, of receiving the approval, you need to pass a special resolution in the general meeting. That is, here it is shareholders, the members. Here it is board of directors. First the board of directors will decide, then apply to the central government. After receiving the approval, shareholders will sit and do a meeting in the next 60 days for removal, and all the shareholders will agree and they will pass a special resolution. So that means auditor is removed. And before that, auditor will be given an opportunity of being heard. Opportunity of being heard will be given to the auditor. Simple as that. You're writing, right? Someone in the back is right. Finished. Okay, done. That is what is written here. You can read it. It's very easy. Same in a simple language it is written. But one thing I want to say, they have not written about the board resolution here. So board resolution should be the first step. But they have directly written application to the central government, all these things is needed. But actually a board resolution is also required. Okay. Because see here they have written application shall be made to the central government within 30 days of resolution passed by the board. So this should be the first point, right? First board resolution, then they have written like this. When you read this, your mind will not be structured. So I will structure auditing in a way, it will be easy for you to learn. Then removal of the auditor by tribunal. Here, this process is what we talked now. This was the process. This process. Now we will talk about how the tribunal will remove the auditor. There is basically three ways. Tribunal is like a upper court, just think like a high court, supreme court, just think like that. First, tribunal or suo moto. Suo moto means they themselves can. If they think they want to remove the auditor, they themselves can. So, tribunal suo moto on their own wish, because you are coming to CMA classes on your own wish. Sometimes some of you may be coming because of parents' pressure. Anything can happen. So, suo moto means parents' pressure. Anybody? What is your age? Everyone's age? 22? 20? എല്ലാവരും 20, 22, 20, 25 ഒക്കെ മേലെ ആരാ തീർക്കാ? തീർക്കാ 25? 18? Appa, 18. So you are on a right track, because if you are attending CMA, CA things in 18, inter, obviously you will become a qualified person by around 20, 21 something. You will easily become. Imagine earning like 50,000, 1 lakh rupees in 21. I started earning at 27, 28. So I was thinking I should have not partied at my younger ages, because till 23, 24, till 24 I was not even interested in studying, just partying, just life was going. Then COVID, for everyone COVID was a tough thing, right? For me COVID was a blessing in disguise. I love COVID. To be honest, I can proudly say COVID made me successful. If no COVID was there, I would have been now working in some Europe, US or something like everyone will go there and work like the basic labor jobs. I would have been working like, not the labor jobs, these hotel, all these jobs. Because I'll tell you, before COVID, it was very hard for me to sit at one place and focus and study. But when COVID came, there was no option for us. And what happened in this March, there was a very big problem. My Wi-Fi got complained. My home's Wi-Fi got complained on this around like 15th March or something. So I have to get it repaired and replaced. But the issue was 20th March or something, lockdown happened. So it was like a local network. They never got the supply. So there was no Wi-Fi also. Nothing to do. And in my home, there was no television. We never had like television was there. This cable connection, all these things was not there. It was simply sitting there. So I never had an option. In phone also only 1 GB or something we'll get. 1.5 GB or something. With 1.5 GB, can you use a whole day? No, right? And like I was having an iPhone, so the data will be taken very fast. In like 3 hours or 4 hours, your 1 GB is gone. So there was no option for me. I was studying. I was registered for the exam. So let me think like, shall I study? Then I thought of studying. Then it became a kick. Because anyways, 6 months, the lockdown was there. So I thought like, let it take to a different level. Let me take it to a different level. Let me show it what I've got. Like 2 groups I prepared. And it was like tuck CA. Initially cleared. Because I joined CA through BCom. So articleship was already going on. It was at the second year end of articleship. Not even a single exam is tough. It's purely because I'll always say confidence comes from preparation. If you prepare well, every exam you can tackle. Because you are giving CMA, right? You can obviously give CA2 or like ACC or something like that. Don't stick with 1 degree. If you are below 25, if you are above 25, I would suggest go with CMA or something and get a job somewhere and settle. There is not a problem. But if you are below 25, you are clearing CMA by 26 minimum. Clearing CMA by 26, take along with that do CA or ACC, CS, whatever you want. Take 2 degrees along with you. Because this, I love your subject costing. Because I'll tell you, I'll give you one way to become highly successful in a CMA. Because normally, if you pass CA, you will anyways get around 75-80,000 minimum. If you pass CMA, you will get around 50-55,000 easily. As a fresher, you will get. But there is another way where a CMA can earn more than a CA. There are only very few job opportunities are there in that segment. Learn about because once you become a CMA, you are planning to go into cost auditing that segment, right? You go there, get some experience for 1 or 2 years, you get that. But I would suggest one more thing. Learn from today onwards, learn about actual costing, how it is happening in real life companies. And you should be able to, once you clear CMA, after you work in a company, go with a manufacturing company. Don't go into a Deloitte or KPMG or those kinds of company. No, your future will be like, you can initially earn money for 1 or 2 years. If your family is financially struggling, you go there, I would say. But no career growth will be there. I would suggest somehow get into a manufacturing company where, for example, manufacturing this phone or remote or AC, anything, car or anything. Go there. Once you go there, make really good friends with all the local people in the company, like the supervisors, the staff, because you won't be seeing the factory, how it is working. They only know how to repair a machine, everything. So learn from them and study how is there any way to reduce the cost of that production. Go in that way. Use your brain and learn that. And once you are a master of that, if you can cut the cost of a company, for example, you devise some idea because of which you can cut the cost of Parle-G biscuits. Parle-G biscuits is now selling at 10 rupee. Their cost will be around like 5 rupee plus all the indirect cost. Everything will come to around like 8 rupees total. So 3 rupees. The product cost will be only 2 or 3 rupees. All the other cost will be 8 rupees. But you find you are working in Parle-G. You found some other way because you know costing. You are an expert in costing. You find some other way where you can reduce 1 rupee. Your salary will be 1 crore there. That is a game in cost management. This is a brilliant paper. And once you clear CMA, also just like study all how Kaizen costing. You will be studying this Kaizen costing. Different costing will be there. Go to YouTube, learn about that. How Kaizen goes. There is something called simple example I can give you. I'll give you this. This is something you need to understand. Every student who is costing, because I regret I also wanted to take a CMA because I am so good at this. What I'm talking to you. For example, there is something called this cellular manufacturing. You have heard it, right? No. Cellular manufacturing. It means like this is, for example, this is a production of Toyota cars. Toyota cars production is happening. So till cellular manufacturing, it was on a straight line. The assembly line, like the car body will be there, engine will be there, and once the body, it will be coming like this. Someone will be assembling engine. So this will be the area where body will be put in the assembly line, and in this area, engine will be put in the body. So this area, the tire will be put in. So this is how the thing was. But some genius guy, so here we need 1 employee. Here we need 1 employee. Here also we need 1 employee, right? So if there are 10 things like this, we need 10 employees like this. But some genius guy, he told, shall we make the production unit like this, U-shaped. Instead of straight shaped, we'll make the production unit like this. Then what is the benefit? 1 employee will stand here. Here we will put the body part. Okay, this employee will put the body part. Then here we will put the, because in a factory, the assembly line will be like 2 acres. The length will be like that much. It's not a small space. So if one person cannot finish this and go on finish this. No. And here another person will put the engine. When it comes to this, come here, this person itself will turn and put it back. And when it comes here, this person will put the tire. So hereby, instead of 10 employees, like 2 or 3 employees can finish the job. Because they do it here, turn it and finish it. This is just a change in the production line. But imagine the level of cost the company would have managed. So this is a brilliance you need to develop. You can like so good learn costing in that way. When a faculty is teaching you costing, don't learn it like for the exam sake of mind. Learn it for your future and get a job in the manufacturing sector possible. Initially your salary will be low. If you go for a big 4, you may be getting 50-70,000 something. Go for a manufacturing, you will be only 30,000. But if you are ready to study in 2 years, you can use your brain to help that only that company itself. Just help that company to reduce the cost. You will become in the top level, chief operations officer, chief. You will be in the cost strategist. You can become. What is the salary of? You cannot know the level of salary you will be getting. It's a very brilliant job, and it's very satisfying too because we are using the brain, not a technical job like putting these things. I cannot do that. So removal of the auditor by the tribunal. He can either suo moto remove the auditor. Suo moto, he himself can remove the auditor, or if an central government gives an application to him, central government finds some issues happening with that company's auditor, central government will give an application to tribunal, or any person gives an application to the tribunal. Any person concerned with that company gives application to tribunal. In 3 cases, tribunal and the tribunal should be satisfied that this auditor has done something fraud. In that case, tribunal can remove the auditor. Tribunal will remove the auditor. And in case purely of, this is a case of just a central government application. If application is made by the central government and tribunal is satisfied that auditor should be changed, within 15 days of receipt of application, tribunal will change him. So there are basically 3 ways for tribunal to change this. This is a tribunal. One, he may get application from a central government. One, he may get application, he may do it on suo moto basis, that is tribunal itself will do, or application from some other person, and tribunal need to be satisfied that auditor did any fraud. Then tribunal will remove the auditor. But just in the case of central government only, tribunal will remove it within 15 days. 15 days of receipt of application. Here the days is not mentioned. Okay, right. And now we'll have a break, then we'll come back. And rights and duties also we'll just do. One second. This is nothing. It's very easy. It's a very, duty is more, we'll just go with the rights. Rights is just, it's very simple. You just read it, you'll understand. What are the rights of the auditor? Where is it? Rights of the auditor. What are the rights of the auditor? He can, what all, I got appointed in Deloitte, in Zomato's auditor, as Zomato's auditor. What are the rights that I have? First is, whenever I want, I can go to Zomato's office, inspect the books of accounts and vouchers. Zomato's office or Zomato's branch office, Zomato's head office at Delhi, so branch office at Bangalore. I can go to Bangalore and inspect their books of accounts, vouchers, everything. Second is, I can obtain information and explanation. If I want any information or explanation, I can ask the management of Zomato, give it to me. Explanation in paper or anything. Next, I can inspect the branch office and branch accounts. Zomato has a branch in Bangalore also. I can go and inspect the branch office, branch accounts. Heading only you study mostly. Other things you write it something of your own. One line from the things you list. Heading focused. Because anyways you are only having 50 marks for this paper. You cannot spend too much time studying everything. Heading you focus. Then receive the report of branch audit from the branch auditor. Zomato's Delhi branch is a main branch. Zomato may have a Bangalore branch. Bangalore branch is audited by some other auditor in Bangalore. So I am the main auditor of Zomato. I audit everything. So I can get the branch auditor's report also. I have the right to get the branch auditor's report. Then I will sign the audit report and other documents because I am the auditor. That is my right. Have the audit report read at the AGM. When I give an audit report, I can make sure that that audit report should be read in the AGM in front of the shareholders. Then receive the notice and attend a general meeting. If I am an auditor, I have the right to receive all the notice regarding the meetings. Meeting is held on 15th August or 15th September. I have the right to receive the notice of meeting. 1 month back, I need to get the notice. Then I have the right to attend the meeting and the meeting of the audit committee. Zomato's audit committee is doing a meeting. I have the right to attend. Even if they don't invite, I can go and attend. I have the right. Then right to be indemnified. That is right to be claimed for any expenses incurred by him in defending himself in case of judgment in any law against the company goes in favor of the auditor. If there is any case happening and he spends the expenses, he has a right to get it back, indemnified. That's it. Then duty we will do it after the break, else you will be fried. But this is very easy. Okay, we'll have a break for 10-15 minutes and we'll join back by 11:30, please. So I'll try to finish auditing by tomorrow itself. Not 4 days. We can try to complete it by 3 days. We'll get one extra day. I'll try to do that by tomorrow itself. But we don't know what will happen. We'll try to do it. Have a break. Guys attending it live also, please have a break and come back by 11:30. 11:32, come back. Be sharp. Why did it? Ram, can you just come here? ഇങ്ങ് വരാൻ മുടിയുമാ? ഒരു നിമിഷം. ഇതിൽ ട്രാൻസിഷൻ ഇടാൻ മുടിയല്ലേ, ലൈക്ക് ട്രാൻസിഷൻ സ്ക്രീൻ ഇല്ല. അതെങ്കിൽ ഇത് എങ്കിൽ പൂജ്യം. So, shall we start? Live YouTube. One second. Yeah. Okay. Arun is back, right? Fresh as shit. So next is everyone had food, right? Food. No one is feeling hungry, right? Because like when I was taking classes in CA Inter, some students used to have food in this break because it was from 8 o'clock in the morning. That is why I asked if anyone wanted to have food also, you can have it in the class also if you want. So, duties of the company auditor. What are his duties? Rights, I told you, his rights. He have the rights. Because what is our right? As an Indian citizen, we have right? Similarly, auditor has a right. But what is his duty? What are the things he need to do? He must do. First is the duty of the auditor to inquire into the following matters. He need to ask questions about the following matters. Whether the loans and advances made by the company on the basis of security. Company has given loan, company has taken security from someone. For example, I have taken a car from someone and given loan. Loans and advances made by the company on the basis of company gave on the basis of security have been properly secured and the terms are not prejudicial to the interest of the company. That means I have taken a car, given a loan, only thing I have to check is whether the value of the car is not depreciating year by year. Because I have given 10 lakh rupees and I have taken, for example, a Skoda bigger car with a value of 20 lakhs. So obviously my 10 lakh is safe. Even if they don't pay the money, I can sell off the car. But after just 2 years, the car stopped production or something. But still he owes me 10 lakh. Now the value of the car is only 5 lakh. So it's a problem, right? It's not secured properly. 10 lakh he has to give me, but even if I sell a car, I'll only get 5. So as an auditor, you have to check whether the value of security also. That is whether it has been properly secured. Whether transactions of the company are represented merely by book entries and are not prejudicial to the interest of the company. Prejudicial to the interest means not against company's interest. Then, in case of the company other than investment company or a banking company, share, debenture and other securities have been sold at a price less than that at which they were purchased by the company. So, as an auditor, you have to inquire because it is a duty to inquire. You have to ask the management, is there any share or a debenture which you have sold for a lesser price than you bought? I am a company. I'm Zomato. I bought 1,000 shares of Reliance. I'm Zomato. I bought 1,000 shares of Reliance for imagine 10 lakh rupees. Then next month I sold the shares for only 8 lakh rupees. That is a question he is asking. Have you bought any shares or debentures and have you sold it for price which is less than the cost? You purchased it for 10, you sold it for 8. Is there something like that? He need to inquire. Then whether the loans and advance made by the company have been shown as deposits. I paid 20 lakh rupees to one person as a loan, but in my accountant mistakenly recorded it as deposits. Deposit is also money going from us. So you have to see whether any loan is recorded as deposit. Then whether personal expenses have been charged to revenue account. Personal expense of someone in the company has been charged to revenue account. Personal account should be charged to his own account. For example, one employee of the company did something, bought some meal for the noon. It is his personal expense. Why should company pay for it? So, whether it is stated in the books of documents of the company that any shares have been allotted for cash, whether cash has actually been received, and if no cash has been received, whether the position as stated in the books of accounts is correct and not misleading. That is, ask the manager, because it is duty to inquire. You have the duty to ask the management, have you issued any shares of Zomato for cash, just for cash? Or in that case, if you issued any shares for cash, whether cash has actually been received, you received the cash, or if you have not received the cash, whatever the position you show in the balance sheet, that the share capital amount or the cash amount, everything is correct or not. Simple as it. So you just have to, this is the duty to inquire means, you can just write it, ask these things. It's his duty to ask these things. Then auditor has the duty to report on financial statements of the company. He receives financial statements for auditing. Now he has the duty to report on it. auditor shall make a report to the members, because members are the ones who appoint him. Members on accounts of examined by him every financial statement, that he also shall report whether in his opinion financial statements give a true and fair view of the company. All these things, simple things. Then duty regarding inclusion of certain matters in audit report. Just read, not a very important question area, but some MCQs or something they can ask. This is the basic, some extra, like whether any qualification reservation is there in maintenance of accounts. Simple things, just read it, you will easily understand. Not a tough thing. All the duties. Normally they will ask you, if they are asking questions from duty, they will ask you what is the duty to inquire, because perfect 6-7 points are there. 7 mark case, like a question is what you get. 7 points are there, they can easily ask duty to inquire. Duty to this one is like a very big thing. They will not, most probably they will not ask this. Okay, but just read it once and go. That's it. How can they ask this? Duty, what is the duty regarding inclusion of certain matters? Most probably they will not go like that. But if your luck is bad, they can. Then duty to report on fraud. This is very, very important. This is the number one duty which is important. Second is the duty to inquire. This is very important, this duty. This is if auditor notices any fraud. When auditing, he noticed any fraud. This is the process in which he need to report to the government. If you as an auditor identified some fraud in the company, you need to follow this process. First, you need to report it to the board of directors or audit committee. If the company has an audit committee, report it to the audit committee. If company don't have audit committee, report it to the board. Within 2 days itself, immediately. Today you notice, try to report today itself. Immediately within 2 days, you identified a fraud, report. And seek reply in the 45 days. You report it to audit committee or board and wait for the next 45 days. In that 45 days, they will give you the reply, audit committee or board. And once you get to the reply, if your reply is received, that is the next case. Reply is received, now forward his report, that is auditor's report, whatever report you have read, that report plus these guys gave a reply, right? That reply plus your report plus the reply given by board of the audit committee plus your comments, auditor's comments on that report, this reply, auditor will have a comment. So whether whatever board audit committee is saying is correct or not, he will have a comment on that. So these 3 things you need to combine and give it to the central government in 15 days. So the better framework for this will be like this. 1 second. You draw it like this way. If reply is received, that is case 1. If no reply is received, that is case 2. This is a way to go with this. First is report to the board of director or audit committee within 2 days itself, immediately itself, and seek their reply within the next 45 days. Once you get to the reply, if you receive the reply, now forward his report, that is auditor's report of fraud, report relating to this fraud identified, plus a reply of these people, audit committee and board, plus auditor's comment on this reply to central government in the next 15 days. The moment he received the reply, from that 15 days he need to things. That is first 2 days report it, then 45 days wait for the thing. Within this day you will get it. In the next 15 days report to the central government. Done. If you don't receive any reply from board or audit committee, in that case forward your report, this report itself, your report plus a note, a sheet of paper containing details of his report given to board of directors, because your report is anyways there, plus you need to make a note. In this note you need to write whatever you have given to this board of directors, whatever you have told the board of directors, forward that to the central government, because you waited 45 days for reply, they never gave you a reply. So in the next 15 days do this. Simple as that. This is a process of connecting to them. Then that is what is written here. Simple. This process is written here, this process. And one more thing I need to tell you, basically this process is for fraud above 1 crore only. If the fraud is below 1 crore, only report to the board of director or audit committee. You don't have to report to the central government or anything. Fraud is above 1 crore, you need to follow this process and ultimately report to central government. Below 1 crore, report it to audit committee or board only. Then they will handle it because it's a smaller fraud. That is what is written here. If the auditor has reason to believe that offence of fraud of an amount of 1 crore or above has been committed against the company, auditor shall report the matter to the central government if it's above 1 crore. Then this is a format of report. This is the process. This is a format. A report shall be sent to the Secretary, Ministry of Corporate Affairs in a sealed cover by a registered post with acknowledgement due by speed post or by an email in confirmation of the same. Simple things, but read it important. The report shall be on the letterhead of the auditor. Every auditor will have a letterhead. ABC Associates for CA, this one letterhead will be there. In the letterhead only you need to give your report with your email address, contact number, membership, sign, all these things you need to put. Then the report shall be in the form of a statement as per ADT4. ADT4 is a form. Similarly, a report should be there. In case of fraud involving lesser than 1 crore, if the amount is less than 1 crore, report the matter to audit committee or to the board immediately in 2 days itself. And when you are reporting to audit committee or board, include these things. In that report, write the nature of fraud. That is, what kind of a fraud was that? Who was doing it? Was it an employee fraud or was it a senior management's fraud? So nature of the fraud with the description. Explain that fraud. Then appropriate amount involved. How much amount was in the fraud? Like 10,000, not 10 lakh. This is below 1 crore, so 50 lakh or something. Then who are the parties involved in the fraud? These three things say to the committee. Duty of the auditor also apply to the cost accountant. Under cost audit also you have to do the same thing. Company secretary also has the same duty. So sometimes they may ask you what is the duty of a cost auditor. You have to write it, same things. In the cost audit chapter it is not mentioned like this. So sometimes they may ask you what is the duty of a company secretary, cost auditor or chartered accountant, anything, same. In case of fraud. Provisions of this section shall regarding the duty of an auditor shall apply to a cost accountant conducting cost audit, company secretary conducting secretarial audit, same things. Then penalty, all these things you just read, it's not like an important area. Then these are the liabilities of auditor. Branch auditor. Oh, yeah, we'll finish it now itself. Liabilities of the company auditor. What are the liabilities he has? First is for the misstatement in prospectus, where a person has subscribed for securities of a company. Prospectus, you know, right? You don't know. You know what is prospectus? It is just a document where a company issues before shares, all these things, subscribing. Then before a person has subscribed for securities, where a person has subscribed for securities of a company, acting on any statement included in the prospectus, and he has sustained any loss, damage, where the auditor as an expert has either made such a statement or has given written consent to issue of the prospectus, he shall be liable. Because it purely means auditor, when a company, Zomato, issues a prospectus, the public subscribe to the shares of Zomato based on the prospectus, everything. So if auditor has given a written consent to the prospectus, and because of that thing, because of that prospectus, that was wrong, and people lost their money, auditor will be held liable because he gave the consent there, same. Then liability for misfeasance. Misfeasance means breach of trust or negligence. He should be ethical, but if he did something which breach of trust or negligence in performance of duty, a company auditor shall be charged with misfeasance only at the time of liquidation of the company. If it is found that he has misapplied or retained or become liable, accountable for any money or property of the company, has been guilty for anything. If he did any breach of trust, he become liable, simple as that. Then criminal liability. Criminal liability is this. If a fraud is 10 lakh or 1% of the turnover of the company. Just look at this, this will be easy. If a fraud of 10 lakh or 1% of the company, whichever is less, Auditor shall be punishable for jail of up to 6 months to 10 years, fine, fraud amount 3 times of the fraud amount. Fraud amount, that when you read it, you will understand. Criminal liability, where the auditor has authorized the issue of prospectus, not that this one. Any fraud of at least 10 lakh rupees or 1% of the turnover, whichever is lower. If there is any fraud of 10 lakh rupee or 1% of turnover, whichever is lower, auditor shall be punishable. He is the one doing the fraud, for imprisonment for a term which shall not be less than 6 months, yes 6 months, but may extend it to 10 years, up to 10 years. And shall also be liable to fine which shall not be less than the amount involved, equal to 3 times the amount, till the 3 times of amount. It simply means that if auditor did any fraud of the amount of 10 lakh or 1% of turnover, imagine the turnover is 80 lakhs. So 1% of turnover is 8,000. 80,000. So 10 lakh or 80,000, whichever is lower, 80,000 is lower. So if auditor did a fraud of 80,000, like 10 lakh or 80,000, whichever is lower, he shall be punishable. His punishment is in jail, that is imprisonment, 6 months to minimum 6 months he will get to 10 years. And plus fine he will also get. What is a fraud amount? 80,000 is a fraud amount he did. So, not 80,000, his fraud amount was 50,000, something, keep it. That fraud amount, minimum fraud amount he will be fined. From that fraud amount till 3 times the fraud amount also. Whatever amount in between he will be fined. That's it. If fraud is below 10 lakh, like a smaller fraud, 10 lakh or 1% of the turnover, fraud is like a smaller fraud. Imagine here he did a fraud of 1 lakh. So it is above 1% of turnover, right? 80,000. Here, if the fraud is below 10 lakh or 1% of the turnover, then jail is only like 6 months to 5 years, fine up to 50 lakh only. Simple. Smaller things, not very penalties and all, they will not ask you that much. Only in MCQs you will get it. Max to max, that's the worst case. Punishment for 139, 140, 145, just read it, it's not that kind of, they can sometimes, I'll just read it for you, this one at least. If an auditor has contravened the above provisions knowingly or willfully to deceive the company, that is to cheat the company intentionally, punishable with an imprisonment of 1 year, fine 25 lakh, all these things. Just read it, you will understand this to this limit, and make it like this format in your book. So it will be easy, because always make things like in this format or some other easy format, not this words, because today you are revising auditing. 2 months after or 10 days after you are revising, then you will have to read this again. Reading this again and understanding it again takes time. But if you put it like this, just by one look itself you will understand. So always make sure this punishment area, just read, you will understand. It's not a tough thing. All these are punishment, jail, fine, whatever the amount, all this. Why should I read it? Then punishment under other acts, Income Tax Act, Liabilities Act, just read it in simple. Then contractual liability, I think, is important. Scope of any audit work is determined by the written contract entered into. That is a breach of contract. For every audit work, I told you, agreement, he will be entering into a contract. If he breaks the contract, this is a fine. That's simple. Scope of audit work determined by written contract entered into by between auditor and client. If any of the terms in the said contract is contravened, auditor may be held liable. As per Indian Contract Act, auditor is expected to conduct audit, he only conducts partial audit, he shall be held liable. This is one thing. You entered into a contract. I'm an auditor, I entered into a contract to do a normal auditing, but I only did a partial auditing. In the mid I go. So I should be liable, right? I should do the full audit. That's what is written, simple. Auditor shall also be held liable if it disclose any secret information of client to third party. I am the auditor of Mamaearth. I found out the new product they are launching next year, and I talked about that to Minimalist. What will happen? Minimalist will launch a new product like that. So I will be held liable. Then now it is branch audit. Aram se pause. Pause out. This penalty I hate. I have never studied a penalty in my CA intra and final. I hate it. I cannot remember it. I never studied. Because in final exams you get around like 5-8 marks of penalty questions directly. But still studying that and remembering, here only like 5-6 penalties are there, right? But there it is, you have to study nearly 100 penalties something in final. Nearly 100 penalty. In DT, IDT, direct tax, indirect tax, more than 100 easily. Then next is branch audit. Branch audit means Zomato has a branch in Bangalore and Delhi. Delhi is the main branch, Bangalore is a smaller branch. So normally the Delhi branch audit will be done, it's a main branch. So when a company has many branches, we'll take Reliance for example. How many branches are there? Reliance Jio, Trends, other like lot of things are happening. All these are subsidiary company. We'll only take Reliance Jio. That's a separate company. It has many branches, like 3-4 branches in every state. So every branch will have a separate auditor. Chennai branch will have a Chennai auditor, but the ultimate, the entire Reliance Jio will be audited by one main auditor. So this main auditor has the right to ask these all other branch auditors to give your branch report. So he'll take the branch audit report of everyone, he'll go through it. If he wants to go and check some branch, he'll go and do that, and he'll compile it, and he'll make a very big audit report for entire branch. That is how he do the auditing in branch audit. So that's what is written here. More than nothing is more than that. And this main branch auditor, he has the power to inspect all the branches also. The Delhi branch auditor, the main auditor of Reliance Jio, he has the power to inspect Bangalore, Chennai, any branch he can go and inspect all these things. Every company shall prepare and keep at its registered office books of accounts and other relevant books and financial statements for every financial year. Every company will, but Delhi, Zomato, Reliance Jio is based on Delhi. Their registered office will be there. The office in the name of which company is registered. Registered of company has to keep all the books of accounts of branch, everything in the registered office normally. But practically it is not that much possible, because Chennai branch, how can they keep the books of accounts? So if they want to keep books of accounts at different places, they can intimate the ROC, tell the ROC that we will keep it at different places. Just tell the ROC, these are the addresses that we are going to keep the books. Only the condition is that Delhi branch is the main branch, other branches are all there. Ultimately you have to keep the books here, but it is not possible, so you are keeping it somewhere else. But at the end of every month or quarter, you need to provide a summarized return of every branch to the main branch. You need to provide a summarized return. Last 1 month, how was the sales, the profit, everything of that branch. Just make it in a sheet of summarized paper return, give it to this branch. Every month you need to get it. That's it. That is what is written here, simple. Then state the following provisions relating to the accounts of branch officer. Accounts of office shall be audited either by appointed personnel. Who can audit the branch? First is mainly the company auditor can, if it is possible, he can come and do the audit itself. That is the best thing. Or otherwise, any person qualified to be appointed as auditor, chartered accountant, can do the audit. If the branch is in outside India, you take a different company, branch is in outside India, in that case, Reliance has a branch outside India, in Dubai. In that case, the Delhi-based auditor can go and audit Dubai's account also, because he is the main auditor of Reliance, or an auditor of that country. Dubai has a chartered accountant in Dubai, he can do the audit there. That is what is written here. Audited either by any person. Simple things you can easily understand. The same things are written. Branch auditor shall submit his report to the company auditor. Simple things. Then next is joint audit. This also you can easily read and understand. All the tough areas that I have discussed in this chapter, like the remuneration, appointment, the charts, everything. That is only area where it is tough for you. These are, you just read it, you will get. But still, I would say, the tougher thing is on audit report. Audit report and cost audit. Cost audit also a lot of charts are there. So, joint audit means, joint audit is very simple. 3 to 4 auditors coming together and doing one audit. I have done 1 or 2 joint audits in my life also. So, as an auditor, sometimes a bigger company like Reliance or Zomato, one auditor cannot do all the audit. So, 10, sometimes 5, 6 CA firms will come together, and one firm will audit one department, other firm will audit other department. So, this way we will do the audit. That is what is joint audit. Process of conducting an audit of a single organization of Reliance by more than one auditor. What are the benefits? you reduce the workload, simple. Then timely completion of work, share the expertise. 3-4 people are coming, some may be expert in GST, another auditor may be expert in income tax. So expertise can be shared, quality of audit work improve, healthy competition will be there, benefit of extensive knowledge, all these things. What are the limitations? Superiority complex. When 5 auditors are coming in, they'll have the feeling, right? Because for example, auditing the GST area is the toughest thing. So some auditors will say, I want that because I'm the senior. Some may be like existence for 10 years in auditing. So that kind of a superiority complex may there. Fixed asset verification, all these things are like easy area that they'll give to a simple guy. But he'll also have ego. The superiority complex will be there. Then not suitable for small entity due to substantial low cost burden. For a small entity, joint audit is not needed. Only one auditor is needed. Then lack of coordination. They may have ego. They may not coordinate properly. Uncertainty about the liability of any work. 3 or 5 auditors are there. 3 may properly do the work. 2 may not do the work. But the entire blame comes on 5. That is a problem. Area of common concern may be neglected. That is, if a company of 3 auditors are coming to audit Reliance, there may be some areas where when 3 people are coming, they will divide the work first. GST area you do, accounts area you do, or this, for example, Mumbai area you do, like they will divide the work. So there may be some areas which are not divided. There commonly everyone need to work. In that area, in that common areas, sometimes may get neglected. Sometimes they will not do the audit there. Then auditors have the share of fees. Even the 5 auditors are there, fees is one fees is you are getting. You have to share the fees. That is also a problem. Then guidelines of joint audit, just read it, division of work, coordination. This can be a question. Just read it. It's very easy. You will easily understand. But relationship among joint auditors and the responsibility, this can be a question. Because 1, 2, 3, 4, 5 points are there. 1 mark for this, 5 marks here, and 1 mark for this. You will get 7 marks question. You can easily come. Dependence also simple stuff. Then role of audit committee. I told you these are the companies which require audit committee. All the public companies with paid up share capital greater than 10 crore, turnover greater than 100 crore, liability or deposits, debentures and deposits greater than 50 crore. Or these are all or. They need to appoint an audit committee. They need to have audit committee. Who will be there in the audit committee? A minimum of 3 directors will be there, with independent director forming majority. That means if there are 3 directors, 2 should be independent directors. Majority should be independent directors. Then and majority of the members of audit committee should be able to read and understand financial statements. That means if there are 3 directors or something, majority should be should know. Sometimes 10 members are there. And it is a science-based company or something, some pharma company or something. Sometimes the people in audit committee may not have been a CA or something. They may have studied something in the science background. So that can also happen. So that is why they have put this, say, majority should know how to read financial statements. Okay. Then broad functions of audit committee. This can also be a question because direct 7 points are there. So always pick those areas where 5, 6, 7 points are written. They can directly ask, and it's easy for them also for checking. Per point they can easily give 1 mark. Easy checking. What are the functions of audit committee? Section 177(4). Recommendation of appointment, remuneration, terms of appointment of auditor. They do the recommendation. Review and monitor auditors' independence and performance. Examination of financial statements. Approval of a transaction with a related party. Transaction with a related party, audit committee gives approval. Scrutiny of intercorporate loans, valuation of undertaking of assets, evaluation of financial controls, all these things are the functions. Simple, it's very easy, but don't leave it, it's very easy. If it comes, it's easy 7 marks. Then power of audit committee also they can ask. 1, 2, 3, 4, 5 points are there. Easily they can, 1.5 marks for each point, done. So study the heading first, all the headings, plus 1 sentence inside something you write based on the content. What are the powers he have? First is, committee may ask for auditor's comment. Because it's audit committee, he can talk to auditor, what are your comments regarding the financial statements, everything. He has a power to ask, audit committee. Audit committee can investigate into any matter in relation to section 177(4). That is this. All these cases, in all these cases, audit committee can do an investigation also. Then board report and audit committee. Board report shall disclose the composition of audit committee, and where the board has not accepted any recommendation of audit committee, the same shall be disclosed. Board of directors need to give a report, that is board report. In that board report, you need to mention how many people are there in the audit committee, that is composition of audit committee, how many people are inside audit committee. And I told you, for appointing auditors, everything, audit committee will give the recommendation to board, and board will give it to the members, who should be the auditor, name of the auditor, everything. But if there is any recommendation like that which board has not taken, board has ignored those recommendations, include those recommendations also in board report, because they have ignored board's audit committee's recommendation. Board has not accepted any recommendations of the audit committee. Disclose that in board report. Then whistleblower policy. This is very important, MCQ. Whistleblower policy is also called as wiggle mechanism, which means that in every company, you take every company, what happens is that some employees may have a problem with the management or something. Imagine you go to a CA firm, for some seniors may be harassing you. It happens in every organization, right? Everyone may be harassing you, someone may be harassing you, or you have identified some fraud, but you want to discuss it to the management, but you are afraid whether management itself is a fraud. So this situation may be there. So wiggle mechanism or whistleblower policy, bigger companies will have that. In that, employee can directly go to audit committee and talk. If he has identified any fraud by the management or directors committee, he can directly go to audit committee and report, and there is a assurance given by the audit committee that no one will know this. He will not share it. It will be confidential. He will not reveal it to anyone. That is whistleblower. Every listed company and company accepting public deposits or borrowings in excess of 50 crore, these people shall establish a wiggle mechanism for directors and employees to report their genuine concern. If they have any issues, report to the audit committee, and audit committee gives the clarity that that will be safeguarded. No, they will not share it with others that you have come and reported this fraud. It will be confidential. Safeguard against victimization, same thing, that is what I told. Wiggle mechanism shall provide adequate safeguard against victimization of person who use such a mechanism, and make provision for direct access to the chairperson of audit committee. If you notice something, you can directly talk to the chairperson of audit committee, and he will not share it with outside. So this is just a case study. If you want, we'll just look at it. It's simple stuff. ABC and the company and audit firm. A, B, C are the partners. Mr. P is a relative of A. Mr. P is relative. Look, disqualification question. Mr. P is a relative of A, holding shares of 60,000, face value of 10. 6,000 shares of face value 10. That is 60,000. 60,000 is a face value. Not a problem, because up to 1 lakh you can hold. So you can write that simple. Value not exceeding 1 lakh, not an issue. This is a very important question. Just keep it with you. A tough question. First two are easy, but you have to do the calculation. We did the same, simple. XYZ company is an audit firm having X, Y, Z as partners and are currently holding appointment as auditor in 3. X is holding appointment of 3 companies he is signing. Y is holding 5 and Z is holding 9. So the total is 5 plus 9, 14 plus 3, 17. So what is the maximum number of audit remaining? 20. Every partner will get, right? 20 into 3 minus whatever they are holding. It's equal to 43. Then maximum number of audit remaining in the name of individual partner. Every partner has 20. So 20 minus 3, 20 minus 5, 20 minus 9. Simple. Then, can a firm accept the appointment as an auditor in 55 private company having paid up share capital less than 100 crore, 3 small company and 2 dormant company? One more thing is that everything is excluded from that ceiling limit. We told, right? So they can accept everything. Normally they can, 43 companies are only left for them. But these are companies having paid a share capital greater than 100 crore. Here the paid a share capital is less than 100 crore, 1% company, small company, we can easily accept. And look at this case. How would your answer differ if out of those 55 companies, 45 are paid up share capital of 105? That is bigger companies. In bigger companies, we can only accept till 43 is left. 45 is there what they are asking. So 43 you can accept, 2 you cannot accept. Got the clarity right? Do I need to explain it? No, right? Everyone got it right? Okay. Doubt anything? Then next is cost audit. We finished company audit, the toughest chapter. It's cost. Now it's like everything is easy. Tuck, 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 we'll finish. Now today we'll mostly finish off with cost audit, join this secretarial audit and audit report. NFRA also. That means that area is done. And if we can spend another 30 minutes also, we'll finish sampling of yesterday. Sampling was pending from yesterday. That's another 20-30 minutes. Done. Sampling is an area I think you require a help, guidance. Otherwise, I would have said read it for yourself, but I'll help you there. Then tomorrow, do bigger chapters, different entity and financial statements. I'll try to finish it tomorrow, even if it's like 1 hour extra or something, we'll finish tomorrow itself. Why should you come on a Sunday? We'll finish. Next is cost audit. Cost audit means simple. Whatever you have learned now, company auditor audits everything. Cost auditor, you will only audit the cost records. This you may know mostly. Like cost audit therefore comprises of verification of cost accounting records, seeing the accuracy, everything. Examination of records to see whether cost principles are properly followed, all these things. It is an independent examination of the cost and other related information in respect of product or product group of products, whether profit oriented or not, irrespective of its size or legal form, when such examination is conducted with a view of expressing opinion. From here to here, it's auditing definition itself, same. Before here only, independent examination. In auditing, what is the definition? Independent examination of financial information of an entity, whether profit oriented. Then independent examination of financial information of an entity, then it is whether profit oriented or not, same. Here, independent examination of cost and other information of a product or a group of product. Means every company, for example, we'll take Cadbury Dairy Milk company, right? This Dairy Milk Mondelez or something, that is a parent company name of Cadbury. This company may have the cost of the chocolates cost, the packaging cost, all the cost will be there. That all the cost of making that one Dairy Milk silk will be written in the cost records. You are only auditing that only. In other auditing, the normal auditing, you will be auditing the everything, internal control, all the things related with assets, everything. Cost auditor audits only the cost area, basically the cost structure of all the products. Cadbury may have a Dairy Milk silk, some other bubbly, all these things. Cost will be there. You will be auditing everything. What is the importance of cost audit? Just read. It's very, very simple. It provide authentic data on cost data, simple stuff, and identify the inefficiencies, helping improving the productivity. Simple things. We will focus on the tough area. This is a very tough area which you may not understand most properly. If you read it, you are on. That is why I made it a chart. If you study this, then the chapter is done. There is nothing more in this. It's like an easy chapter. First is cost records. Cost records. It means this cost, like Dairy Milk silk cost, bubbly's cost, all the cost records will be there. All the companies, I'll say what is in A and B. Just look at this. Here, we have a list of companies. List of companies doing this business, telecom business, generation, transmission, distribution of supply of electricity, petroleum gas, drug, fertilizer, sugar. Just leave this part, you leave it. This part, yes, just look at the name and keep it. Telecommunication, gas, petroleum, drug, fertilizer, that much is enough. So these are sectors which are regulated, controlled by the government. Because a drug sector, nobody can, tomorrow you cannot start a drug business. Drug means this, no, not that drug, I'm talking about the medicines. Medicine business you cannot easily start tomorrow. Or petroleum business you cannot start. All these are regulated, only you need to get approval from the government, all these things are there. So these businesses are regulated businesses. Then there are a list of non-regulated business like turbojet, turbo propeller, arms and ammunitions, radar apparatus, then tank, port services. So many things are there which are non-regulated. Cement or base metals, all these things. Just go through it once. You don't have to study or memorize anything. Just go through it once. Glass, other machinery, textile. These are non-regulated businesses. So all the companies in A, that is regulated businesses and non-regulated businesses. All these companies doing these businesses in A and B, Any company doing a fertilizer, producing sugar, or producing whatever it is, like iron, steel, cement, anything. All these companies, all the companies in A and B whose annual turnover in the previous year is greater than or equal to 35 crore, then they need to maintain cost records. All those companies in A and B, if their annual turnover in the last year, previous year, is greater than 35 crore, they need to maintain separate cost record. Books of accounts will anyways be there, but separate books of accounts, that is cost records, you need to maintain. For the cost of, here we have fertilizer company, here we have cement company, all these things. You need a separate book where the cost of all the cement, everything will be mentioned. What is the cost of raw material, what is the cost of packing, all these things. So these companies include foreign companies also. Exclude MSMEs. MSME is like a smaller companies, it will be excluded. For all the products and services, annual turnover means, keep one thing in mind, sometimes a company may be engaged in cement manufacturing. Cement is the cement production. Cement is there in that B category list. But that company may also be doing say some consulting services also. Some consulting services. An auditor is doing auditing business and cement business under one name. Just keep consulting, not auditing, consulting and cement business in one name, XYZ Limited. So the turnover of XYZ Limited will include 25-30 crore from cement and another 5-10 crore from consulting also. Here you will take the annual turnover of the big entire company, not only the cement cost, you will include the consulting cost also, because his company has now 30 crore from cement and 10 crore from consulting. So total is 40 crore. It is above 35 crore, so cost records is needed. Annual turnover of all the products will be included of their company. Then cost audit. This is cost records. Who need to maintain cost books of accounts? This is who need to get cost audit. Always remember, this is rule number 3 and this is rule number 4, because sometimes they may not ask directly who need to audit the cost audit something. Who need to explain the provisions as per rule number 4. They'll say like that. You need to understand rule number 4 is cost record or cost audit. Keep it in mind. Because I've seen questions like that in your like CMA somewhere. Next is this one, cost audit. Auditing of cost records. You maintain the cost record. Now you are checking their cost record. And who does that? You do that. You do that. CMA. Cost auditors mostly. So companies in the A regulated sector, A category sector, that is these companies, if their annual turnover from the products and services, PS means products and services, this PS means products and services, if their annual turnover from the product and service in the previous year is greater than 50 crore, and it is and or not or, and aggregated turnover, annual turnover means the turnover from all the business, the consulting plus cement turnover greater than 50 crore, and aggregated turnover from the products and service for which cost records are required to be maintained, that is turnover from cement only, because cement is the main area, right? Cement needs the cost record. So in that case, turnover from cement is also greater than 25 crore, then you need to do the cost audit. Simple example is, a company is having different products. A company called ABC Limited, have different products. These 3 products are there in ABC Limited. First product is drug and pharmaceuticals. Turnover is 28 crore. Next is a wheelchair. Wheelchair is not included in this. The A category list, wheelchair is not included. This is included in the A category list, drug. Then another patient bed and other products are there. Hospital beds, all these things. That is also not included in A category. And that turnover is 30. So total turnover of the company is 53 crores. So overall turnover from all the products 53 crores. It is above 50 crore. Okay. Then we look at the turnover from individual product which require cost records. In these 3, only drug require cost record, right? So aggregate of turnover from drug is 28 crore. That is above 25 crore. Both of the conditions are satisfied. So company needs a cost audit. Simple. Then another thing is, company in the B sector. the second category sector, this sector, non-regulated sector, if the overall turnover is 100 crore and aggregated turnover from the individual product is 35 crore, greater than 35 crore, cost audit is required. Example, iron and steel. Iron and steel is there in this category. Iron and steel is there. Then cement is also there. It is a company where many products are there. Iron and steel 30 crore, cement 10 crore is there. Designing services, it is not in that service area. Other products or services also not there. So total turnover is 105 crore, that is above 100 crore. Then aggregated turnover of products or service that require cost record is 40 crore, 30 plus 10. 30 plus 10, 40 crore. That is above 35 crore. So they require cost audit. Got it, right? And one more condition, both these companies, A and B, coming in A and B category, everyone, for all these companies, A plus B companies, if their revenue from export, if they are exporting this cement or exporting this drugs, revenue from export is greater than 75% of the total revenue. That is, in this total revenue of 100 crore, they 75, that is 80 crore is coming from export of drugs, not drugs, export of cement. Because here we have cement, right? Export of cement. Only 20 crore is coming from some other activities, like the internal sale within India, domestic sale of cement. Then they don't need cost audit. This is a tricky condition they have. So they don't need cost audit. Or if they operate from a CEZ, special economic zone, that is a separate area in India where you can operate businesses. If they operate from a special economic zone also, they don't need cost audit. Or if they generate electricity for captive consumption, then they don't need cost audit. Some here, because here generating electricity was mentioned, like somewhere electricity is there. Generation of electricity, this company is asked, right? So if this company is generating electricity for captive consumption, what is captive consumption? Simple, captive consumption means company generating revenue for company's use only. They are not selling it outside. Imagine THARUN'S Brainery, we put a solar, we are generating electricity, we will be getting electricity and we are using it only for our use. We are not selling it. So that is not a problem. If the company is generating electricity and selling it outside, then it comes under this category. If it is generating revenue only for its own use, then you don't need a cost audit. Simple as that. And now it will be very easy. I used this method to explain what is written here, written in all the languages. So now I'll take you to one chart where your institute has made. This is a super fiddling chart, super chart. Applicability of cost record, regulator sector, that is A category guys and B category guys. If the overall annual turnover is greater than 50 crore and plus aggregated turnover is greater than product 25 crore, then you need a cost audit. Simple. They have given it a very good chart. This is a really good chart. Then if the revenue, regulated sectors, if the revenue from export is greater than 75 crore, then you don't need cost audit. If operating with special economic zone, you don't need cost audit. Similarly for regulated also they have made. You will easily understand. And this chart, but I would say don't study directly from this chart. You can use this for understanding because here everything is properly written. You want to write it or should I give it in a Telegram group or something? Telegram group would be better, right? Writing this much is not easy. Then, yeah, we talked all these things. Then maintenance of cost records. Just it's not. Appointment of cost auditor. That is another area. This also, I would suggest read from this would be better because this language is not that easy for you to understand. First is appointment of a cost auditor. For your easy understanding of written, cost auditor should be a cost accountant. Simple as that. Not a company secretary or cost accountant should be a cost auditor. He should be appointed by the board of director. Cost auditor should be appointed by board of director within 180 days from the commencement of the financial year. Financial year starts on 1st April. So within 180 days, cost auditor need to be appointed by board. Next, written consent plus a certificate needed from the cost auditor. Same as the case of normal auditor. Written consent that he is willing to be appointed plus a certificate is needed from cost auditor. In the certificate, these things need to be mentioned. He need to mention, the cost auditor need to write, he is eligible for appointment and not disqualified for appointment under Cost and Works Act. not under the Companies Act. Cost and Works Act, something is there. And also satisfy section 141 of the company, that is eligibility, qualification, disqualification of company also. Company's qualification also he need to satisfy. Works, this cost and work contract also he need to satisfy. Then auditor, this is auditor appointed under section 139 cannot be the cost auditor. That is company statutory auditor. He under section 139 we appointed a statutory auditor for Reliance or like Zomato, whatever company. They cannot become the cost auditor. Cost auditor is a different person. Statutory auditor cannot become a cost auditor. Company to inform cost audit of his company should inform the cost auditor of his appointment and file a notice to the central government in form CRA2. When company board of director appoints a cost auditor, he need to directly need to tell the cost auditor first that you are appointed. Then tell the central government in form CRA2 that this guy is appointed. Within 30 days of the board meeting, the decision was made on this board meeting. Within 30 days, you need to tell to him and tell to central government. Then or within 180 days from the commencement of financial year, whichever is earlier. Then cost auditor can remain in capacity till, that is he can hold the office till 180 days from the end of the financial year. 31st March financial year is ending, till the next 180 days he can be in the office, or till he submit the cost audit report, whichever is earlier. 180 days, 31st March his period is gone, then till 180 days he can stay in the office. That is 180 days means 30 into 6, right? 6 months. Till September he can be in the office. But he submitted the audit report on July. So whichever is earlier, July is earlier. So July he need to vacate. Auditor can remain in auditor can be removed before expiry of his term by board resolution. Like there we said about removal of auditor. Here also auditor can be removed through board resolution. Opportunity of being heard, like opportunity of being heard should be given. Casual vacancy should be filed within 30 days by the board of director and inform central government in CRA2 within 30 days. If casual vacancy, some cost auditor died or he resigned and go, in all those cases, that casual vacancy of that seat is vacant. That vacancy should be filled by board of director within 30 days. And once it is filled, inform the central government in the form CRA2 within 30 days. Simple as that. Here he died this day. Within 30 days, he need to be appointed. Within 30 days, cost auditor appointed. And in the next 30 days, inform central government. Simple. So cost audit is almost done. Then nothing is disqualification of cost auditor, remuneration, reporting requirements done. This is also a theory. This we studied. Yeah. Disqualification. Person disqualified under 141(3). That is Companies Act. We talked about many disqualifications, like the holding share, all these things. If he is disqualified under 141(3), he shall not be appointed as a company auditor, cost auditor, sorry. And auditor appointed under section 139 also cannot become the cost auditor. 139 means the statutory auditor cannot become the cost auditor. Remuneration of the cost auditor decided by the board of directors and recommended by the audit committee. Audit committee says to the board that we shall pay 50,000 to the cost auditor, and board will agree that. Or if audit committee is not there, board itself will agree, come with the remuneration, and this will be talked to the shareholders. In case of remuneration, if the company is having audit committee will tell board we will pay 50,000, board will share to the shareholders. If company is not having audit committee, board itself will say to the shareholder directly. Then rights and duties of the cost auditor, same we learned there on auditing also. I told you, right, when learning the rights, they may ask you about the rights of cost auditor. It is not mentioned here. Sometimes you may write this and come. No, you have to write the rights there. Same rights. Applicable to the company auditor shall also apply to the cost auditor. Then it's a duty of the company to give assistance to the cost auditor. Submission of cost report, cost audit report. Like the other audit report, cost audit report is also there. Every cost auditor submit a report in CRA3. Cost auditor forward his assigned report to the board of directors within 180 days from the closure of the financial year. Simple. Company within a period of 30 days from the date of receipt of the copy of cost audit report. Company, when they receive the cost audit report, within the next 30 days, furnish it to the central government with such a report, full information, everything in CRA4. Simple items. If central government is of the opinion that any further information or explanation is necessary, he will ask it and will need to provide. These are the CRA. This is 100% MCQ. Sometimes they can ask. what is form number CRA1, what is form number CRA2, 3, 4. They'll ask you, they'll give it to you like cost audit report, what is a form? CRA1, 2, 3, 4, 4 options will be given. You have to write it correctly. So this is definitely 100% you need to study this. Most probably they'll ask you in MCQ. And then penalty part, just read like 25,000 to 5 lakh will be the penalty, easy. And this is very important. Reporting requirements of cost audit report as per CRA3. Reporting requirement means audit report, cost audit report, CRA3. CRA3 we are using. Cost audit report content. This is actually the question, contents of cost audit report. This is the answer if they ask you a question like that. First is whether he has obtained all the information and explanation to the best of his knowledge, simple things. Then whether in his opinion proper cost records have been maintained by the company. Company need to maintain cost audit record, whether it has to be maintained by the company, say that. Then whether proper returns adequate for the purpose of cost audit have been received from the branches not visited by him. I am the cost auditor of one company, many branches are there. So for auditing I need details from the branches also, and whether I have received those details, whether branch has given me that. Simple. You just mention that in the cost audit report. You need to write all these things in hand, by hand in cost audit report. You need to mention all these things. Whether in his opinion the said books and records give information required by the Companies Act. Cost records give information, whether cost records is prepared as per the Companies Act also. You need to write in the books, yes or no. Company has adequate system of internal audit of cost records, which to the opinion is commensurate to the nature size of the business. Commensurate means these bigger companies, definitely they have an internal audit system, internal audit department, because it's bigger companies. So whether they are doing the internal audit of cost records also, he just need to check whether company has an internal audit department and that department is doing the internal audit of cost records also. And one more thing he need to see whether that internal audit department is commensurate, that is matching with the size of the company. For example, Reliance, it's a very big company and internal audit department is of 3 people. It's not matching to the size of the company. 3 people cannot do the internal audit of entire Reliance. So commensurate to the size of the company means at least 30 people need to be there. That is common. He need to report that. In his report, he'll write, yeah, I am the cost auditor of this company and Reliance. And Reliance has a really good internal audit department. They are doing internal audit of cost records also. But I doubt that only 3 people are there in the internal audit department. For a company like Reliance, there should be more than 10 people at least. So that is one area that I have doubt. Like this, he'll write it in the cost audit report. Not in this language, but like this, I told you for your understanding. Then, am I going too fast? Should I go slow? Speak slow. Understanding it, right, everyone? I'm going fast, like somehow we need to finish it, right? And it's only this much. There is nothing more to explain, because all this easy stuff you can read and understand. Why should I waste time explaining? Because everyone will get bored explaining easy stuff too much. These stuff, most of you may know all this stuff that I'm teaching, but at least one in the class may not know. I'm teaching for that one person, explaining more. Then, whether in his opinion, information system in the annexure to the cost report give a true and fair view. True and fair view, everywhere it is there. Then, whether detailed unit-wise and product-wise cost statement schedules are maintained by the company. Detailed unit-wise cost. For example, take Cadbury itself. What per unit of Cadbury, one dairy milk silk, what is the cost? Whether they are maintaining records like that. Sometimes they will maintain an entire cost record. That is cost record for Cadbury dairy milk silk. They may have produced 20,000 units or like 20 lakh units in 1 year. The entire cost will be written. And in that raw material will be there, working, it will be like a complex stuff. So when company is maintaining cost record, they need to maintain it in a clean format. Like all the bigger things needed, but cost record for per unit of Cadbury dairy milk silk, per unit of bubbly, all these things should be detailedly given. So auditor need to say, see whether detailed unit wise and product wise cost statements are kept and schedules are also kept. You just need to check that. Okay. Then illustrative case studies. These are simple case study. You can read it yourself. It's nothing. Casual vacancy, who will fill, simple stuff. Secretarial audit means, this is the easiest thing, secretarial audit. Secretarial audit means normal audit, just understand this. Statutory audit, CA's audit, it's done by chartered accountant. Cost audit done by normally cost auditor. Secretarial audit done by company secretary. Three things, tuck, you will get it. Then done by the company secretary, CS. Else why should there be 3 degrees, CA, CMA, CS? Everyone has their own area to focus. So who needs to conduct a secretarial audit? Secretarial audit, yesterday I explained. Cost auditing, we are checking whether the cost records, cost price, everything was correct, cost expense, everything was correct. But in secretarial auditing, we will be checking whether the company followed all the rules and regulations, whether the company has complied all the laws and regulations. That is what auditor, the company secretary checks in secretarial auditing. Understand the difference. Like statutory audit, auditor CA checks everything. Cost auditor is even smaller. He'll only check the cost records. Then company secretary comes, he'll only focus on the company, the compliance areas. Like I told you, form CRA need to be filed, form MCA, like ADT need to be filed. So many forms company need to be filed, like DER3 KYC, many forms are there. So he will check whether everything was correct. So these are the companies which require secretarial auditing. These are the companies which require secretarial auditing. Every listed company, public company having paid up share capital of 50 crore or more, 50 crore, public company having turnover 250 crore, every company, public or private or whatever, outstanding loans and borrowings of 100 crore or more, they need to do the secretarial audit, and the company secretary will give you a secretarial audit report, and you need to put that report along with a board report and give to the in file form MR3. Simple, you will read it, it's not that complicated. Is required to annex, required to attach with its board report a secretarial audit report also given by the company secretary in practice in form MR3. Board report plus secretarial audit report you need to attach together. Done. It's a duty of company to give all assistance to company secretary to doing the audit. Simple things. If a company or any officer of the company or the company secretary contravenes any of the provisions, fine of 2 lakhs. Company or officer or CS company secretary did any contravention, they did not follow any provision of this, 2 lakh fine will be there. Simple. Just keep it in mind, 2 lakhs fine. SEBI regulations, SEBI LODR. SEBI regulations, every listed entity and its material unlisted subsidiary, listed company and its material unlisted subsidiary, listed company and its unlisted subsidiary incorporated in India shall annex a secretarial audit report with the annual report also. As per SEBI, every listed company and all the unlisted subsidiaries of this company, unlisted material subsidiary means, I'll just give a simple example, then you'll understand. Reliance is a listed company. Reliance has nearly 150 subsidiary companies or something. It's a huge number of subsidiary companies are there. So imagine there is one subsidiary company in this, only 2 subsidiary companies are there. Reliance only has 2, just imagine. And this is all these are unlisted, not listed, not in the stock market. Reliance is only there in the stock market. These are unlisted. But this is like a big company. This is what we call a material unlisted company. You don't have to learn about all that. That is a different league. Like in final, CMA final, you may learn it. This is a material unlisted subsidiary. So you need to see every listed and its material unlisted subsidiary. This should be incorporated in India also. This should be incorporated in India also. Material unlisted subsidiary shall annex. These 2 companies shall put their secretarial audit report plus along with annual report together. Secretarial audit report and annual report, they have to keep it together. These 2 companies. This is not needed. Annex a secretarial audit report with the annual report of the listed entity. This should be. Then qualification. Only member company secretary can do the secretarial audit. Appointment of the company secretary. Who appoints? By the board, by board resolution. Board itself will appoint. Cost auditor also board. This also board. Then it is advisable for the secretarial auditor to get a letter of engagement. from the company. That is, before doing the secretarial audit, get an agreement, that a letter from the company that you are appointed as the company secretary to do the secretarial audit. Get an agreement like that. Then secretarial audit report. Format of the secretarial audit report shall be in form MR3, that is an MCQ. And board of directors in its report shall explain all the qualifications, observation, simple stuff. Then already told above this, we have told SEBI LODR things. Same thing. Like we told here, right? This. That is the same thing they have written again. Then case done. That is also done. Secretarial audit is also done. Then here it is. P Limited is an unlisted public company. Unlisted public company. P Limited is an unlisted public company. I'll give you the case. Unlisted public company having paid up share capital of 45 crore. Paid up share capital of 45 crore. Turnover of 225 crore. Bank loan of 100 crore. Whether the company is required to conduct a secretarial audit. Just look at this. This simple. Simple. They have it. Every public company, it's a listed, not a listed company, unlisted company. That condition is gone. Paid up share capital 50 crore. Here it is only 45 crore. So we don't need it. Then public company turnover of 250 crore. Here only 225 crore is there. We don't need it. But every company outstanding loan and borrowing is 100 crore. So here 110 crore is there. More than that. So they need a secretarial audit. Got it, right? Any confusion, anything? Okay. That chapter is also done. Then this is a chapter we'll learn tomorrow. Financial statements. Now we have audit report. What is this? Audit report. So today we have audit report, NFRA, and one more is there pending. What is that? Sampling. Sampling from the last time. Appa. One page you will not be finish it because like the financial statements is like 30-40 pages is there, right? Then like 20 pages. You'll go with and guys attending on live, you have your textbook with you, right? Attending through YouTube, you have the textbook, right? Guys, now please everyone attending on through YouTube, stay with me for this one chapter, because don't skip this chapter, because audit report is very, very, very important in terms of your future also, because it's very today's session is actually the most important session for you. Yesterday's session also, yesterday's core area, the risk assessment you may not understand, the further audit procedure, that you require a faculty. This area also you require a faculty. Tomorrow's area, if you want, you can read and understand by yourself. But anyways, I'll definitely teach you. Anyways, I'll be coming, because this audit of items of financial statements, audit of different entity, like how to audit a club, how to audit a hospital unit, that's fun to teach. It's very easy to teach as well. But everything is the same. You can read and understand that too. 12:44 only. Audit certificate. I'll focus on the important area only this chapter. This chapter, the most important area is audit opinion giving area. That is tough to understand. Which opinion you need to give when the financial statement has a mistake, material misstatement. What opinion should you give? There are many opinions are there. I'll teach you. You may not understand what is opinion, right? So audit certificate, it is issued by a CA. It is issued by a CA, chartered accountant, certifying some financial information, example turnover certificate or net worth certificate. Means auditor do the auditing and give audit report. That is audit report. This is audit certificate. There are many things, not only turnover and net worth, many things where auditor signs other than the audit report. For example, you want to go to UK for a studying or some abroad job or something. What you need to do is, first you need to show it to the government that what is your net worth, what is your asset of your family, how much properties you have, gold you have, all these things. That is what we call a net worth certificate. And you will write up everything, that I am this guy and I have this much assets, everything. My father is this much, not this much, father is this, and I have this much assets, everything. And an auditor need to verify and sign that. That is what we call an audit certificate. Everything other than the audit report where auditor signs, that is audit certificate. For example, turnover certificate. A company like THARUN'S Brainery want to take a loan. We need to take a loan from the bank. So last year's our turnover was, imagine, 10 crore. So we told the bank, and this is like, as of now, it's May, June is there. Imagine this is August. Imagine this period is August. So we don't have the audited financial statement of this year, right? Only August, when 31st March only we can do the auditing. So when we go to take a loan, bank will say, we went to take a loan of 15 crore rupees, imagine. So bank will say, give me your audited financial statement. We gave it. In that only 10 crore was there. So in the balance sheet, our asset revenue itself was only 10 crore. Then how will bank give a 15 crore loan to us? So we told the bank, no sir, this year we are doing so good. Now itself, the last 6 months itself, we have done a turnover of 20 crore. Because our business is going online so much, everyone is purchasing our lectures, it's going. Bank, how will bank trust? Because audit has not happened in this year. Bank will say, okay, go to a chartered accountant, get the turnover certificate of 6 months and come back. So we will go to a CA and because anyways we are CA, but we cannot do that, not practicing CA. But we will go to a CA, he'll in a piece of paper write, THARUN'S Brainery has 20 crore turnover in 6 months. And that is what we call an audit certificate. It's not an audit report, it's audit certificate. Audit report from auditing, entire auditing. This is audit certificate. Understand the difference very well. Then that is audit report. It's a written confirmation of the exactness of facts, exactness of turnover, exactness of 10 crore, 20 crore amount, and does not involve any estimate or opinion. We'll just sign it and give it, that's it, audit certificate. And then this is the difference, you just read it, it's very easy. And here, what are the characteristics of a good audit report? Good audit report, it can be a question, only learn the headings and write it in your own language, simple. Audit report should be simplicity, clarity should be given, it should be clear and unambiguous. Then brevity, it should be brief and specific. Simply don't write all the stories, everything. Firmness, should state whether in the opinion financial limits are true and fair. Simple, you just read it, get it. Then what are the contents of audit report? Contents of audit, this is important area. Audit report has basically 3 types of contents. One is as per the Companies Act. Companies Act, some rules, everything are there. Auditor has to report according to that. Something as per standards on auditing also he has to report. There is a third horrible thing called CARO. That is Company Auditors Rules Order or something, CARO 2020. That thing, you have to, there are many provisions that is written, where according to which you have to report. So audit report contains one section for companies audit, company area, other section for standards, other section for CARO. Not separate section, but it is there. Audit report has contents in it as per Companies Act, standards on auditing, CARO. First is, as per the Companies Act, these are the things that is included in audit report as per Companies Act. First is, audit report shall state whether he has sought, that is whether he means auditor, whether auditor has sought, has obtained all the information and explanation from management that is necessary. When doing the audit, he will obtain information from management, right? Whether he has got everything that is necessary. He will write that in the audit report. Yes, I have done the audit, I got everything that was necessary for me. Then, whether proper books of accounts company has maintained, he will write it. Yes or no, he will write. Whether the report of any branch office audited by any other person, Delhi branch, other branch audit report has been sent to him or not. He will write about that. Then company's balance sheet and profit and loss account are in agreement with the books of accounts. It's prepared from books, that is what he's checking, whether books and financials are correct. He'll write that. Then whether financial statement comply with accounting standard, he'll write. Then are there any matters which have any adverse effect on the functioning of company? For example, company had entered into some agreement with another company this year, but auditor doubt in future that will be a problem. Example, Swiggy and Zepto entered into an agreement, but auditor has a doubt that Zepto sometimes may cheat Swiggy, something like that. So auditor will write that also in the description. Are there any matters where auditor thinks it will affect the company? Then any qualification, whether any director is disqualified from appointment. Auditor disqualification we learned. Director disqualification is not in your syllabus, so you don't have to learn about that. But there are disqualifications for director also. In CA final we learned about that, like director disqualification. So if any director is disqualified, then write about that. Any qualification, reservation, adverse remark, write about that. company has adequate internal financial control also, write about that, simple. Then section 143, in case of any matters answered therein, all this is simple thing. This is important. Fraud. If there has been any fraud, fraud against the company or fraud by the company, whatever it is, fraud is being or committed against the company by officer, auditor shall immediately report the matter to the central government. We learned it, like 1 crore plus 4 repeat that item. See. Then another thing is, audit report shall also include his views and comments on following matters also. These matters also should be included in audit report. What are these? Whether any pending litigation is against the company, whether company has a case. For example, you know the food farmer, there is a guy called Food Farmer in Instagram. He's like a doctor or something, I don't know what he is. He reveals all the bad products in the Bonvita biscuits. They'll be saying that sugar free, but actually it may have sugar. All these things he'll reveal. So this guy, what he did, he filed a case against Bonvita. Bonvita had a very, they told it is very good for health, but something was there which is bad for the kids. And ultimately he won the case. And Bonvita had to pay a compensation or something and change the label, everything, etc. So auditor of Bonvita, imagine when the case was timing. Litigation means a case is happening against Bonvita. So Bonvita's auditor at that year should mention that Bonvita is having a case with the food farmer also in the audit report. That is what is written here. Whether the company has disclosed the impact, if any, of pending litigation on its financial position in its financial statement. No, not like that. See, company knows that if company loses this case, company may have to pay a fine of at least 5 crore rupees minimum. So it is actually that is something affecting the company. So as per accounting standards and auditing standards, company need to disclose that in the financial statements of company. As an auditor, we need to check whether company has disclosed that in the financial statements or not. If company has disclosed that, say it here. Company has not disclosed that also, say it here. See, got it right? Then whether company has made a provision as required under any law for material foreseeable losses. Future, for example, Zomato and Swiggy has, Zomato and Swiggy has, not Zomato and Swiggy, Blinkit and Zepto has joined together. Blinkit and Zepto has joined together. Now it is very tough time for Swiggy, Instamart. It's very tough time. So like foreseeable losses they are overseeing. And they have joined together and they got a funding of 5,000 crores also. Just think like that. From Japan, SoftBank or someone paid the funding. So now it's obvious that Swiggy will be gone in the market, because how can they beat against these two giants have joined together and they got 5,000 crore funding also. They'll give everything for 5 rupees if they want. That much money they have with them. So in that case, material foreseeable losses will be there for sometimes. This is not an actual case. The thing is, if there is any case against the company, which if the company loses, company will be shut down. All these cases, foreseeable losses, we are expecting loss in the future. That also, whether company has made a provision for those loss. Then whether there has been any delay in transferring the amount to Investors Education Protection Fund. Company has to transfer some money to IEPF. Whether company has delayed in that, that's it. This is something which you may not understand just by reading. Auditor, company, sometimes company may have, Zomato may have some excess fund. Think the process. Zomato have 5,000 crore, 5,000, not 5,000, 5 crore rupees of excess fund. What Zomato will do is, Zomato will give this money to some intermediary, some company, and that company may invest it in some other areas just to get the return. As an auditor, just see whether there is something like that. If yes, report it in the audit report. Whether Zomato, that is what is written here. Whether the management has represented that, management has said to the auditor that no fund have been advanced or loaned or invested by the company in other intermediary, and that the intermediary shall lend or invest in other person on behalf of the company. Here, our company, Zomato, gave money to this guy. this intermediary will invest money in some, because he may be so good at stock markets, everything. He'll invest that money in 5 different companies. So if there is something like this, report here, simple as that. Whether management has represented, said to the auditor, we have not done anything like that or not. And here it is the exact opposite. Here it is actually, this intermediary is investing for us. Similarly, here the case is exactly opposite. Whether management has represented that no fund have been received by the company from a person, and the company shall lend or invest in other persons' entities on behalf of the funding party. Here, Zomato is receiving money from some other bigger company. Reliance is giving money to Zomato. And Zomato is so good at something, and Zomato is investing this money in somewhere else. So Reliance is called the funding party. Zomato is the intermediary here. And he is investing somewhere else. Whether something like this is happening, mention. That's it. You most probably you will not have to write this much. You don't need to learn too much about this. I'm just explaining this because if they ask what are the requirements of Companies Act for 7 marks, you can easily write some easy points from this. Why should you go and write that tough point? That tough point, just understand and keep it in some MCQ or something. Sometimes if that comes, that's it. Don't try to learn everything. Don't try to learn everything word by word. It will not be possible, especially in company language. Understand what is important and learn in your language. That is why I'm explaining the meaning. Then whether any dividend has been declared and paid during the year by the company, is it in compliance with section 123? Whether company has used such accounting software for maintaining books of accounts. There is something called audit trial. I'll explain that in that one chapter. Audit trial is there, like sampling chapter, next chapter we have audit trial. Audit trial means a tracking of sale. For example, sale on every transaction. So, just for understanding, I'm saying, if a sale happens, there is a process of entering sale and reaching it in the P&L balance. If a sale happens, what will happen? First the money will come. The accountant will put the entry, cash account debit or debtor account debited to sales. So debtor is also there, sale is also there. Now the sale is transferred to trial balance next. From trial balance it is transferred to P&L. So it is a chain reaction is there, and whether debtor money has been received or not. So just for a sale, many things are there. This is what we call an audit trial. So when you are, so all the accounting, now major accounting softwares now have this feature called the audit trial. If you click at the sales, from there you can see whether that money has been received in the debtor, from where invoice, when, on which day the invoice was entered, everything, that all the history of that sale you can track it. That is what we call an audit trial feature. A loop will be there, connect. From that sale go back to debtor, sales, cash, that date. You can connect the entire transaction, you can connect. That is what we call an audit trial. So it is now almost mandatory that most of the companies using this software should have an audit trial feature. Then only auditor can easily identify, else auditor will have to cross check and identify all these things again and again and again. So if the company, whether company has used the accounting software which has an audit trial feature, auditor has to mention that the same has been operated throughout the year and audit trial feature has not been tampered. Okay? Okay. Auditor has to see whether Zomato is using accounting software which has audit trial feature, and if yes, this audit trial feature should be operated in the entire year, because people can easily turn it off and on. It should not be turned off. He has to ensure that. Simple. Now we'll have food, I guess. Then basic elements, you just read. It's very easy. That also I'll just give you an idea. Just read it. You can read it, understand. This is a format of audit report. Audit report, you should have a format, right? The first heading will be title, where independent auditors report, the heading. Next, addressee, name of the company. Zomato's audit report, so Zomato Private Limited, what is the address, things will be there. Then auditor's opinion. He has done the audit. What is his opinion? He'll state there. You don't need to understand all these things. They never, most probably 99% they will not ask you to draft an audit report. In CE also they are not asking that. So just understand it. If luck is bad only, for that purpose I'm saying. Then basis for audit opinion. That is, auditor reached an audit opinion. I'll teach you what is audit opinion. For reaching that audit opinion, what are the basis? What are the evidences? What are the basis? We'll write in the fourth point. Then reporting to the going concern assumption. Going concern, you know, right? You don't know, right? Going concern, about whether company will exist in the foreseeable future, report about that. Then the next thing is key audit matter. Key audit matter means when auditor is doing the audit, he may identify certain very important matters that are very crucial to be said in the audit report. That matters are called key audit matters. I'll explain that in the essay when the essay comes in. Then responsibility of the financial statements. Management's responsibility for financial statements. Another section will be there. That is, management is responsible for preparation, all these things. Then the next, auditor's responsibility will be written. What are auditor's responsibilities? Like objectives of the auditor, reasonable assurance, all these simple things will be mentioned. Then other reporting responsibility. Then at the end of that, sign of the auditor will be there. And after that, the place of signature, like Kochi, Chennai, place of signature will be written. Then date of audit report, 27th August, date will be written. In the sign of audit report, they can ask this as a question if they want. It should be signed by the auditor in his personal name. If it's a single auditor, like a proprietor auditor. If it is an audit firm, then firm is appointed as the auditor, report is signed in the personal name of the auditor and firm name also. Firm name also need to be mentioned. If it's just Sudarshan, I am doing my sole proprietorship business, Sudarshan is CA Sudarshan is my sign done. If I am a part of a partnership firm, 3 auditors are there, CA Sudarshan is another, then my like this ABC Associates where I am partnership audit, that also will be mentioned. The company firm's name will be mentioned. And the partner's membership number, Institute of Chartered Accountants membership number we have, that will be mentioned. Firm's registration number will also be mentioned if it's a firm. These things. This is important. Sometimes they can ask you for a question, this much. Then auditor's responsibility, just study the heading and keep it. This one. Objectives of the auditor, reasonable, 2 points or 3 points, just keep in your mind. Not more than that. Management's responsibility, sometimes they can ask this also study, this also study. Key audit matter, they will not ask you that much. Title, address, nothing. Just read for MCQ purposes. Key audit matter, done. Then it is about contents that we will do it after lunch. So hungry. We are almost finished with this chapter. CARO is also done. What is opinion? We will finish it in. See, this is an audit report, similar to an audit report. This is not an audit report. To the members, independent audit report, all these things. For auditor's opinion, basis for opinion, key audit matter, responsibility of management, financial, other matter, thing, sign for the company, chartered accountant, firm name, signature, everything is there. It's a format. Now we'll go for lunch and we'll come back by around 2 o'clock. Contents of the auditor, till here, from here we need to start, right? Yes. What to do? Done. And guys attending it on live, just have a really good meal and come back. And don't eat too much carbs. I'm gonna have a biryani because anyways I'm speaking. Okay, I can have my energy expenditure. You just have like a small food. You see, anyone coming for a biryani? One more friend will be with me, so I have to go. I forgot that. Okay. So see you after lunch, guys, on the chat. Okay, see you after lunch. Have a small meal and come back. Another 2 o'clock to 4:30 will anyways wind up. Okay. Here is transition. You had lunch. என்னென்ன சாப்பிட்டுருக்கு எல்லாருமே? Normally rice தானே, rice. Or is there anybody following like a very crazy diet or something? Like an intermittent fasting? It seems like you are hitting the gym. So you follow any sort of a diet? Nothing. In CA time, it's very hard to follow these crazy diets. Because when I was doing CA, before I joined CA, I was like too slim. Like, slim as like hell. I never had even 10 kilo of muscle mass on my body. But then when doing CA, I built it. Then that is during CA inter time. Like your body got built. Then in inter, when I reached final, 2 years of extreme stress, no gymming, no fighting, nothing. I was into like small fighting things, martial arts, not other fight. So not doing anything. Physical activity, zero physical activity. It became like I became overweight, 110 kgs or something. Now I am also more than 100 kgs sitting. You may not see the size, but I have more than 100 kgs. But I would always suggest when you go for when you are studying for the next, anyways for 2-3 years you would be in study, right? Inter, then after inter 15 months of articleship. 15 months of articleship. So what you will do? You have CEO also along with that, right? Huh? Not in planned. So, but can you take? We cannot take that CA articleship into CMA, right? No. You have to do 3.5 years of articleship. CA 2 years, CMA half years. CMA final. I would suggest always, yeah, if you go with CA, then CMA examinations, auditing, I would say this is better. Definitely, this is more topics are there in CA, but this book, studying from your book, everything is much better than CA. But other subjects, I don't know how it is in CMA. But here the syllabus is almost the same, CA, CMA, everything. That is why I always suggest you, if you are learning CMA, you can always do CA too, because everything that you are learning is correct. This syllabus plus around like standards are there in auditing. Auditing standards are there, plus 2-3 chapters are there. Here you are studying it for 50 marks, right? So there you are studying it for 100 marks, 2-3 extra chapters, auditing is done. Just think like that. You have tax, right? Tax, DT and ADT, both are there. GST. Most probably 70% topic will be the same. Anyways, you are studying it the same. Then only the exam pattern is different. In CA, you will get like a case study based questions, where in CMA, you will get direct questions. But anyways, you have studied this much. Why can't you do that also? Like I'm suggesting not CA or any other courses. If you don't have BCom, get a BCom too. Because if you are studying CMA, BCom is like a cakewalk for you. Nothing, it's very easy, because I have BCom everything, but with BCom you won't get any job, but BCom with the CMA it's better. You may have a skill set. Or also, if you are not doing anything, only CMA, then don't go into a Deloitte or these kinds of companies, go into manufacturing. If we have some sort of a degree along with that, CMA plus CA plus or ACC or BCom anything, not BCom not, CA or CS, if you have, you go into a Big Four, you will get good placements in the future. But I am talking about at least earning 3 to 4 lakhs per month. That is the level I am talking about, not 50, 70, 1 lakh you will get it in Big Four also. Bigger dreams require bigger aspirations. Like I would say, get into costing sector. That is a game, especially for women also, because you guys are so good at multitasking. You can handle everything together. So your skill set is so good there, because men and women, as far as I have observed, men has a really good skill in handling pressure, all those areas. We are so good in that. We can, if a very big issue is coming. For example, if an exam is coming, men won't become that much scared compared to women. But the game of women, their advantage is that they can do 3-4 tasks at a time. We can only do 1 or 2. Beyond that, we will be like very few men can only do more than 1 task. But they can study CA, CMA, whatever it is along with that, they can manage everything. They'll also manage if they're going to gym, if they're cooking in the home, everything they'll manage. Because I am now struggling. I'm staying alone in Chennai. So I have to cook, I have to study, I have to teach, I have to do my washing, ironing, everything. So I'm feeling, but if in my place, if it was a woman, she would have happily did that. And still she would get 2 hours of free time every day. Somehow they'll manage. And like, mudiyale. எப்படியாவது அந்த மேரேஜ் பண்ணணும், like 10 minutes. Okay, like at least 2 people will be there, right? So yeah, we talked about the content of audit report in terms of Companies Act. Now it is a content of audit report as per CARO. This is Very easy. A content of Companies Act we taught, then format of audit report as per this one. Standards on auditing area we taught, one second. Contents of audit report as per standards. Now it is just CARO. CARO means, just think of it like, it is just a rules. Just like Companies Act, just like everything. It's part of all these things, companies. It's a rules, and these rules is purely for audit report only. Companies Act, lot of things are mentioned, director, appointment, auditor, everything. This CARO is just a rule book for audit report. When you are making an audit report, you have to follow this book. This is like a small book, this much is there. Think of it like that. Small book, small, some laws and regulations are written. You have to just follow that when you are doing your auditing, when you are making your audit report. In CMA, I don't think they'll ask complex questions from CARO, case-based questions, nothing. But if it's in a different examination, CA or something, you'll get case-based questions. So there I'll be teaching CARO, like everyone on the live is present, right? Everyone who was attending on the live, just show a hi or something, or write something in the comment box. I just need to know whether you guys are actively listening or not. Yeah. So CARO, for you, it is not that much required to study it completely. But there was one approach that I gave, that is a mnemonic, where all the clauses of CARO will be in the exact order. Clause number 1, 2, 3. But you don't have to write clauses like that, I think. So learning normally would be enough. Not needed of learning too much detailed about in depth of CARO. So first is CARO. CARO is applicable. CARO means CARO. Companies, let's see, companies, auditors, report, order. That is CARO. Yeah. It shall apply to this CARO principles shall apply to every company, including a foreign company, except these companies. These companies don't need CARO. If you are making an audit report of these companies, you don't have to follow CARO. But all the other cases, you have to follow CARO. Okay. Banking company, you are auditing a bank, you don't need CARO. Insurance company, no need CARO. Then Section 8 company, you don't need CARO. One person company, small company, dormant company, all these things don't need CARO. Then private limited company having a paid up share capital and reserves, not more than 100 crore, you don't need CARO. Not more than 100 crore and paid up share capital. What is this CARO not applicable? 1 crore, sorry, 100 crore, not 100 crore, 1 crore. I'm sorry. So paid up share capital, CARO is not applicable to private company having paid up share capital less than 1 crore, paid up borrowing less than 1 crore, what is this? Revenue, that is turnover, less than 10 crore. If you are auditing a company which has things beyond that, bigger private companies only, CARO is applicable. Listed companies, CARO is applicable. Unlisted other companies having these limits, CARO is applicable. Okay. Banking, insurance, Section 8, not needed. Private company having, which is below this limit, is not needed. CARO is not needed. Then these are the matters to be included in auditor's report as per CARO. So, which means many matters are written here. You have to study all these matters. And when you are making the audit report, if, for example, non-current asset, every company will have a non-current asset, PPE, property, plant and equipment, every company will have. So, when a company has PPE, you have to report these items in the audit report. These items you have to report in audit report. For example, first clause is para number 3, clause number 1. That is how we used to say this. Para 3, clause number 1 of, clause number 3, subclause number 1, yeah, of CARO 2020. This is how we use it. Para 3, clause number 1 of CARO 2020. As per para 3, clause number 1 of CARO 2020, this is, you need to write. If the company has a non-current asset, whether the company is maintaining proper records showing the full particulars of the asset, like the quantity, quality of all the assets. If company is having an PPE, whether company is maintaining a proper record of PPE. THARUN'S Brainery is having AC, bench, everything we have. This is our PPE. Whether we are maintaining a proper record of the PPE. For THARUN'S Brainery, you don't need CARO because we are not over 100 crore turnover or something. So we don't need CARO. But bigger companies, you may need CARO. Whether we are maintaining proper record of AC, what is the price of AC, what is the depreciation of AC, all this you have to report. Then whether property, plant and equipment have been physically verified by the management at reasonable intervals. That is, every company need to physically verify this. Bigger companies for which CARO is applicable, they need to physically verify their assets. PPE, they need to physically verify, and if there is any material discrepancy noticed, material notice, whether it has been shown in the books of accounts. Material discrepancy means if one asset AC is not working, so we have to reduce that from our assets, right? It is not working, so it is not an asset as of now. So whether that has been included in books of accounts, you have to report that. Then whether title deed of all the immovable property, buildings, title deed means the stamp paper, the things. Whether title deed of all the immovable property of THARUN'S Brainery is in the name of THARUN'S Brainery or not. We have shown in the balance sheet that we have a land and building of, we have 3 land and buildings, one in Nungambakkam, Nagar, and one other property also. We have 3 land and building, and auditor has to check whether these land and building is in the name of this business itself. Sometimes we are just showing it in the balance sheet, but sometimes we may not be owning it. So we have to check that. Auditor has to report in the audit report, PP head, CARO head, PP head, he has to write company has 3 assets and it's in the name of the company. Done. Then whether any proceeding have been initiated or pending against the company for holding any binami property. Binami property means, I may have a lot, example in the movie actors or politicians especially. Take one politician from Tamil Nadu, you may take whomever you want. They may be having some sort of a binami property. They may have the money, but they cannot own property in their name. They may be owning a property in their wife's father's name, brother's name, all these people name. That is binami property. Whether any proceeding have been initiated or pending against the company for holding. Company held a binami property in the past or something, and there is a proceeding, a case against the company for holding that. If there is something like that, mention it here. Because binami property is also a immovable property area. Building something will be that, right? So all the PP comes under here. P. That is P. This is a mnemonic that I used to give to remember all the clause in order. If you want, you can use it. That is PILAG, CP, CDC. There is a name. Consider it as a name. PILAGS, it's a name. PILAG, CDC is a name. He is a sure money fraud, and Nitin NRC and Rema TQ. We used to give it so that you will remember the entire CARO in your mind. You will never forget the order. This is clause number 1, right? So P, clause number 1. So that way you will remember. Next is inventory, I. P, I. Inventory is clause number 2. In the case of inventory, whether physical verification of inventory has been conducted at a reasonable intervals. Company had this much inventory. Every company need to physically verify the inventory, whether it has been conducted at reasonable intervals. And if there is any reasonable intervals, where is it? Reasonable intervals and discrepancies greater than 10% or more for each class of inventory notice, whether they have been properly dealt in books of accounts. In the company's books, it is inventory shown as 10 lakhs. Physical verification is done. Auditor need to see whether companies has to physically verify this at reasonable intervals, that is 3 months or 2 months. Reasonable intervals, they have to physically verify this. When they verify, sometimes as per the books, it is 10 lakh inventory. Here also inventory, but some inventory may be damaged. So they should be written down to a minimal value, right? So whether that has been done. If it is less than 10%, whether it has been done. I don't give you practical questions or anything on this, most probably, but just understand it for the sake of understanding. Then whether during any point of time in the year, company had been sanctioned working capital limit in excess of 5 crores. Last year, whether any working capital sanctioned to the company in excess of 5 crore, and further whether quarterly from banks on the basis of security of current assets, and whether quarterly returns or statements filed by the company are in agreement with the books of accounts. These things also you have to check. Whether any working capital loan has been taken by company in excess of 5 lakh rupees. And if yes, mention that here. And whether the quarterly returns and statements filed by the company are in agreement. I'll tell you why. Companies need money for working capital. And how will they get this money? They'll take it as a loan from bank. And to get this loan, I'll tell you how they do it. They may have 20 lakhs of inventory lying in their godown. They will pledge this inventory to bank. They'll say to bank, I have 20 lakh inventory in my godown, just give me 15 lakh of loan. So they'll give 15 lakh working capital loan. So if it is that loan is more than 5 crore, mention it here. And also see, every 3 months, every quarter they have to submit the quarterly return and statement of inventory. What is the value of inventory in every 3 months? Whether that is correct or not, check it. That is auditor's duty. Then PI lags. Lags means loans, advance, guarantee and security. Lags. Whether investment is providing guarantee, security, loans and advances. Whether during their company has provided any loan or advance or guarantee or security. Company has given any loan, advance, guarantee or security. In that case, indicate what is the amount given. 10 lakh loan is given, 10 lakh indicate. And what is the balance outstanding at the balance sheet date. On April 1st, company gave 10 lakh loan to someone. At the end of that year, some EMI will be repaid back, right? So 10 lakh state, aggregate amount, 10 lakh you need to put here. And what is the balance outstanding at the end of the year? Sometimes it may be 9,50,000. So state balance outstanding is 9,50,000. Done. Then, and whether it has been given to subsidiaries also you have to state, and if it is given to other parties also you have to state. Separately. Loan is given to a subsidiary, stated in point number A. Loan is given to someone other than that, stated in point number B. Then whether the investment made, the terms and conditions of all the loans given are not prejudicial to the company's interest. Company has given loan without affecting people's interest in the company. Simple. Then in respect of loans, whether a schedule of repayment of principal and interest has been stipulated and whether receipts are regular. That is, you have given a loan to someone. Have you told him that every month you need to repay this by schedule of repayment? What is the interest component coming every month? What is a principal component coming every month? Have you mentioned that as a schedule and given to him? If yes, mention that. And see whether all the receipts are proper as per the schedule. Every month 3,000 need to be paid back. Whether we are getting that money, write it in this clause, CARO. Then if amount is overdue, state the total amount overdue for more than 90 days and whether reasonable steps have been taken by the company for recovery of the principal. We have given loan, but some money has not been received and it is overdue for more than 90 days. Mention it here if there is something like that. Who was that person? Why he has not paid and what are the reasons thereof, and whether company has taken steps to get back the money and what were those steps. Write it here. Whether loan or advance granted which has fallen due has been renewed or extended. This means company has given a 10 lakh loan on April, but for the last 1 year or 6 months the people has not paid it back. So that person told the company, sir, we are having a very big shortage of money. Now you gave me 10 lakh, just give me another 15 lakh. So total 25 lakh will be there. And I'll use that 15 lakh. From that money also I'll try to repay something back. You give me 15 lakh, I'll pay you the 10 lakh back and 5 lakh I'll take. So it will be happy, only he need 5 lakh. So something like that. If company has given a fresh loan to repay company's existing loan, 10 lakh is existing loan, to get that money back, company gave 15 lakh and he'll give 10 lakh back. So company's loan is repaid. Fresh loan given to repay the existing loan, first case, or that is case number 1. Next case is 10 lakh is given by the company for 3 years, but that person cannot repay it in 3 years. So we extended the limit for the next 6 years we give it. That is a case number 2. Next case is we gave 10 lakh and he is properly repaying. So we give another 5 lakh also. The loan has been extended. In these 3 cases, whether any loan or advance guarantee security has fallen, not that. Where is it? Loan or advance security has fallen due and has been renewed, extended, fresh loan granted to settle the overdues. Specify the amount which was renewed, whatever the amount we gave, what was the amount which was renewed, all these things you need to specify. Simple. Then whether company granted any loan or advance either repayable on demand or without specifying the terms, then specify the amount. Company gave a loan, told him whenever you get money repay me back. No term, nothing is mentioned. In that case, specify that amount. Then PILAG CDC. C means compliance with section 185 and 186. If company has given any loan to the director of the company, whether company has complied with the section 185 and 186. Auditor has to write that. Next, deposits. Acceptance of deposits. If company has accepted any deposit, whether company complied with the section 73, 76. Simple. That is sections relating to acceptance of deposits. Then CDC, maintaining of cost records. Whether maintenance of cost records is specified and whether such accounts has been maintained. Because I told you there are only certain class of companies need to maintain cost records. If this company want to maintain cost record, okay, whether they have maintained it or not, check it. Done. Then statutory dues means the money that company need to pay to government in terms of tax or provident fund, insurance, all these things. So, is the company regular in depositing its undisputed statutory dues? Two types of statutory dues are there, disputed and undisputed. Disputed means you did a sale, or sometimes you thought you had to pay 10 lakh as tax to the government. So you were planning to pay 10 lakhs at that month's GST, but suddenly government told you have to pay 12 lakhs, some error in the calculation. So you disputed. Why is that? What was the issue? So government says something, you said something. So it is actually in a dispute. It's in a problem. So you went to the court. Government also went to the court. So that is a disputed statutory due. So when a dispute happens, the money will be only paid once the dispute is settled. Sometimes it will take 6 months, 6 years or something to settle. So only 6 years after we will repay it. So that is what we call disputed statutory dues. Undisputed is also there. Undisputed means no issue. This month's money, this month you will pay. So all the statutory dues, whether the company is regular in depositing that, whether the company has properly every month's GST, every month company is paying it or not. If whether company is regular in depositing statutory dues like provident fund, insurance, income tax, sale tax, everything, and if not, if company is not regular, the extent of arrears outstanding, how much money company has to pay. Company has not paid some money. What is the amount of arrear that company has to pay? He has to mention that as on the last day of the period, last day of the financial year, for a period of more than 6 months from the date they become payable. As on the last day of the financial year, that is 31/3, 6 months before that. That is, what is 6 months? March, February. It's basically October 1, right? October 1. So all the statutory dues which has been in arrear before this date, he has to mention that. Simple as that. And if not, the extent of arrear outstanding as at the last day of the financial year for a period of more than 6 months. That means amount which has not been paid from October, this period. Then in case of income tax or sales, if there is a dispute happening, you are having a dispute with government for tax issues, dispute is in, fight is happening, that is, you told 10 lakh, government told 12 lakh, so this issue is happening. In that case, auditor has to mention in the audit report that a dispute is happening between government and these people for this money, and where the dispute is at. Is it at a tribunal? Is it at a court? What is the place where the dispute is happening? Mention that. Plus, what is the amount of dispute? 2 lakh is the amount of extra. 10, I said 10, they told 12. So amount is, state that I said 10, he said 12. So amount of dispute is 2 lakh. So state that. Then forum means where is it happening? That is High Court or Tribunal or whatever, Supreme Court or whatever it is. Then PILAC, CDC, S, statutory dues, SU, unrecorded income. Unrecorded income means company, I'll tell you the process of auditing and paying tax. We'll take a smaller company, not a bigger company. Normal THARUN'S, Brainery, like a company like this, normal medium company. So here, by the end of 31st March, auditor, the management would have prepared the financial statements. So by around April, May or something, we will prepare the financial statements properly and we will give it to the auditor. So our auditor will do the auditing, everything. And when we prepare the financial statements, there is an item called profit, right? We are preparing it as per the Companies Act. Profit will be there. Imagine it is 10 lakhs, that is a profit. And when we give it to the auditor, he does the auditing, everything. Okay, fine, everything is correct, 10 lakh is okay. But this is as per Companies Act. When it goes to Income Tax Act, some allowances, disallowances will be there. You have studied that, right? For example, personal expenditure, if there is anything, it will be disallowed. So the profit changes in Income Tax Act. Companies Act, the profit is there. Income Tax Act profit is different. We pay tax as per the Income Tax Act. Income tax profit into 30% is what pay the tax, not as per the Companies Act. So when I am preparing the financial statements, I may have not recorded some income. For example, the CMA batch, I asked 1,000 rupees from each of you. So you gave me, like 20 people are there, you gave me 20,000 rupees. That money I forgot to give to THARUN'S sir. So he forgot to put it in the company's books. So this amount is unrecorded. But so in our company's balance sheet, company's P&L, this 10,000 is 20,000 is not there. But when it goes to Income Tax Act, there is one big thing happening. When you want to pay tax, you will put it in a software called Winman. Like if you've gone to office, you know, and there you can directly get the data from income tax website. So there in the income tax website, it will be shown 20,000 rupees income also for me. So it's actually my income, THARUN'S income, but has not recorded in the books of accounts. But that has been revealed in the tax assessment. If there is any income that has not been recorded but has been revealed in the tax assessment, then auditor has to mention that here. Auditor has to mention that here, and whether company has included that in the books of accounts also, because it's actually company's income. So whether company has included that also. Got it? Or do I need? Got it, right? Sometimes if there is any unrecorded income or the company, during tax assessment, tax people or someone, auditor finds that income, whether company has recorded that income. Simple or that. Simple. I just gave you this entire scenario because it will be useful in your practice works. So I told you. Then a repayment of loan. Earlier we talked about loan given by the company. This is loan taken by the company. Repayment of loan. Whether company has defaulted in repayment of loan, anything. If yes, what is the period and amount? Whether company is declared a willful defaulter, that is, we have money but still we are not paying. That is what we call a willful defaulter. Some students, if they come, for example, giving a scenario, some students may not even pay the money even though their parents are rich. They'll ask for some, sir, I don't have any money, but we don't know whether they're coming from a rich family or not. So this happens. So that is a willful defaulter. Loan is taken by the company, but not, we had money, but you have not paid. So you are a willful defaulter. If company is declared as a willful defaulter by bank, auditor has to state it here. Then whether term loans applied for the purpose for which loans were obtained. If not, amount is so diverted on the purpose. I took a term loan from the bank telling them that I need to purchase a plant and machinery. But I use that money for some other thing else. That is, taken the term loan for a purpose, but not utilized it for the same purpose. If there is something like that, mention, report. Then whether fund raised on a short-term basis have been utilized for a long-term basis. I took a short-term fund, used it for a long-term fund, used it for a long-term purpose. If yes, indicate the nature amount. Whether company has taken any fund from entity to meet obligations of subsidiary. Reliance is okay, but Reliance Jio is subsidiary. So Jio is having a very big financial crisis. So Reliance took loan from a bigger bank for 10 crore or something and gave it to Reliance Jio. If there is something like that, report it. Whether company raised a loan during the year on pledge of security held in its subsidiary. Reliance hold shares in Jio, right? And Reliance is facing very big issue now. Now Reliance is facing issue. So Reliance won't get a loan from bank. What Reliance did? Reliance had shares in this company, Jio. Reliance pledged this share in the bank and took a loan for Reliance itself. If there is something like that, report. Simple. All these issues, if you notice, you have to report in CARO. Simple. Then utilization of money raised by FPO, IPO. That is, IPO means raising money from the stock market. IPO. Further, FPO means further public offer. That also similar, raising money from the stock market. If company has raised money from the stock market, whether company has utilized it for the actual purposes or not. Just include that here. Where applied for the purpose for which they were raised. If not, state there. Same for preferential allotment also. Then preferential allotment or private placement means issuing the shares to already shareholders will be there in the company, issuing it to them only. IPO, FPO, company Zomato is going for an IPO. We can also purchase shares. But if it is going for a private placement, then only the actual shareholders of Zomato can purchase. They can only get it. We won't get it public. In both the cases, state that. Then fraud, if there is any fraud reporting, normal reporting, you just read it, you will get. That is 1 crore above fraud report to the, that case is written here. As per section 143, all these things. Then whether auditor has a whistleblower complaints all mentioned. Then Nidhi company, if it's a Nidhi company, whether the net on the fund to deposit ratio is in 1:2 or the 1:20, maintaining just report that. Then whether Nidhi company is maintaining 10% of unencumbered term deposits. Unencumbered term deposit means I put money fixed deposit, just to keep it fixed deposit. There are two options. If I put 10 lakh as a FD in a bank, my FD is there, I will be getting the interest. Against this FD, I can take a loan also. 5 lakh of loan also I can take from the bank. I can pledge this FD itself. My 10 lakh is there in the bank. Just take it as a security and give me 5 lakh loan. I can do that. So when you do that, then it becomes encumbered deposit. You have pledged that FD. That is encumbered. When you are not doing that, FD is there, but you have not pledged anywhere. It is called unencumbered term deposit. Whether Nidhi is maintaining 10% unencumbered term deposit as specified. All these things are not important for you. Just understand it and keep it. That is why I am not over explaining. Then related party transaction, whether 177, 188 complied. Internal audit, whether company has a good internal audit system commensurate to the size. I told you what is commensurate. Then report of internal auditors were considered by the statutory auditor mentioned. Non-cash transaction, whether company entered into a non-cash transaction with the director, then specify that. Then whether provisions of 192 complied. Registration of company in the nature of company. This is RBI. That is section 45 IA of the RBI Act, whether it's a case of a banking company or something. Not banking company, a company which may need some banking license or something. So whether company is required to be registered under 45 IA. If that company needs to get registered under RBI, then whether registration has been obtained. Auditor has to state that. Whether certificate of registration is there, state that. If it is a core investment company, if it continues to fulfill the criteria of core investment company, state that. Whether group has more than one core investment company, if yes, indicate the number of core investment company has. Core investment company means a company whose main purpose is doing investments only. No other business will be there. Its main purpose is taking money from someone, investing in other companies, making profit, giving to them, taking one commission in the business middle. Cash loss, whether company has a cash loss in the financial year and in the immediately preceding financial year. If so, state the amount of cash loss. Resignation, if statutory auditor has resigned, state it here. What is the reason? And when all the auditor resigned, he may give some observations, issues, whether that has been considered by the new auditor. Then this one, that is information about material uncertainty, that is going concern. Whether any going concern issue is there, stated here, simple. Then last one, unspent CSR amount, there is a CSR expenditure there. CSR expenditure, just report it here, that's it, simple. As per these rules, you have to, if there is any unspent money in the CSR account, you have to transfer that to a separate account. If there is something like that mentioned here, it's not that very important for you, like directly these questions will not be coming. They sometimes ask, write about CSR reporting in CARO. They can directly ask like that, then you write this, but other case study questions will not come as of that much. Then qualification, if auditor has put any adverse remarks or qualification, mention that, simple. Now is the very important area. This is highly important and you need to study. CARO is not that important. It's important, but compared to this, it is not important. This you don't need to study anything. I'll just explain it with a simple example and you will easily understand that. Eh? Ayyo, where is it? Super. Then I'll explain it from here. I made a chart yesterday, but I don't know where it is. I'll show it to you in my CA inter-audit book. What is this chapter? Audit report. This is audit report. This is the CARO that we learned now. Reporting under CARO, companies auditors, that mnemonic that I told. Comparative financial statements corresponding. Yeah, this is the thing. I'll teach you this, what this table is. Just this table is enough for you to decide upon the audit opinion. CMA inter-audit. Okay. Auditor's opinion. Basically, there are two audit opinions. This is very important. Everyone just listen. This is super important. Guys attending it on live also, show me your energy because this one requires That kind of an energy. I would say there are basically two types of audit opinion. The sudden spike in the energy you saw, right? Whatever it is. So, two types of audit opinion. Financial statements. Imagine a financial statements is given to the auditor. Auditor need to audit that financial statement, check everything whether it is correct or not, and give a report. In this report, two things he'll write. If everything is correct, he'll write everything is correct. Everything what is as per the true and fair view of the financial statements, it's good as per the financial reporting framework, everything. In that case, it is called unmodified opinion. Unmodified, because we are not modified anything. Whatever they give to us, everything is perfect. Yeah, that is called unmodified opinion. Second thing, if they gave us a financial statements, we audited something and there was some problems in that. So in the audit report, we'll mention that, right? I audited this, there were some problems. In that case, we'll write that opinion is called modified opinion. Whatever they gave to us, we modified it. Modified opinion. So two types of opinion are there, unmodified opinion and modified opinion. In the case of modified opinion also, there are three types of modified opinion. I'll explain this, don't worry. Qualified opinion, adverse opinion, disclaimer of opinion. These are the five things: unmodified opinion, modified opinion, and three things inside that. This is what you need to learn. I'll show it to you, or I'll, how should I teach you this? First, auditor's opinion. Auditor's opinion is divided into two. Unmodified opinion, modified opinion. This is given when everything is correct. This is given when something is wrong. And here we have three types of opinion: qualified opinion, adverse opinion, disclaimer of opinion. You got this much, right? Then unmodified opinion, we'll do this first. Unmodified opinion is also known as a clean report. Everything was correct, clean. Next, auditor issues an unmodified opinion when he finds out that financial statements have been prepared using generally accepted accounting principles and consistently applied. Done. Then it complies with the relevant statutory requirements. Okay, adequate disclosure is given. Any change in accounting principles are properly disclosed. It's a perfect thing. We give an unmodified report. Done. Next is modified opinion. It is done as per the SS 705. Auditor's opinion, total opinion is coming under SS 700. Modified opinion means SS 705. You don't have to learn too much about SS, just understand this. As per SS 705, there are two circumstances when auditor gives a modified opinion. When financial statements are wrong only, he will give modified opinion, right? Same. Auditor concludes that based on the audit evidence obtained, financial statements are not free from material misstatements. That is, financial statement has mistakes. Then he gives modified opinion. That is one case. Or auditor unable to obtain audit evidence to conclude that the financial statements are whole are free from material misstatements. In that case also he will give modified opinion. That means to reach a conclusion that whether everything is correct or not. This is the final conclusion, right, what we write. So for that he need audit evidences. Evidences for debtors confirmation we need, for bank also confirmation, lot of evidences we need. So first case is auditor obtained, or auditor got all the audit evidence that the financial statements is wrong. Whatever evidence he got states that financial statements is wrong. As per the evidence he got, the financial statements are wrong. In that case, he will give a modified opinion. Second case, he was unable to obtain any audit evidence. He didn't get any audit evidence, but he believed that the financial statements are wrong. Then also he will give modified opinion. So these are the two cases. This is not that much important. This is very important, and this qualified, adverse and disclaimer is important. Then in modified opinion we have three options: qualified, adverse, disclaimer. Which one should give it? Which one auditor should give it? Which scenario? First is qualified opinion. When he obtained the audit evidence, first is he obtained the audit evidence. Auditor, having obtained sufficient appropriate audit evidence, conclude that misstatements are material but not pervasive. He obtained audit evidence. Tick, audit evidence has been obtained. And the misstatements, the mistakes, he obtained audit evidence that financial statement has mistakes. But these mistakes are material, bigger mistakes are okay. But it is not pervasive. Pervasive means big. Misstatements are material. It's actually a crucial, significant material, but pervasive means it affects many areas. Like I told you, overall financial statement level affection. Similarly, it's material. Important mistake is there, but it's like a small mistake. Size is small, but it is actually a crucial mistake. In that case, it is material, but not pervasive. Give qualified opinion. He obtained audit evidence and concluded that the misstatements are material, but not pervasive. Give qualified opinion. Material, but not pervasive. Just keep that much in mind. This one. Material, not pervasive. Not pervasive. That is first case. Second case, auditor unable to obtain audit evidence. He could not get audit evidence. But but concludes that possible effect of the undetected misstatements. He have not detected misstatement. He have not got proper audit evidence also. But he believes, he thinks that the possible effect of the undetected misstatement which we have not detected, could be material but not pervasive. Material, not pervasive. Then also this one, qualified opinion. That is, I'll show it to you. I'll write it here. Qualified opinion, when should auditor give? When sufficient appropriate audit evidence obtained. And sufficient appropriate audit evidence not obtained also. If auditor obtains sufficient appropriate audit evidence and conclude that material misstatements are material but not pervasive. Material but not pervasive. If you obtained audit evidence also, if you don't obtain audit evidence also, if the misstatements are material but not pervasive, he give qualified opinion. Simple as that. Only learn that much. Material means important material, but pervasive means it's like a not pervasive, not affecting everything. Same. Adverse opinion means he obtained sufficient appropriate audit evidence. He obtained the audit evidence and conclude that misstatements are material and pervasive. It is important misstatement and it's a very big mistake. It affects everyone. Got it. Adverse. Qualified opinion, you got it right. Similarly, here we told auditor obtained audit evidence, auditor unable to obtain audit evidence, whatever the situation is, misstatements are material, not pervasive, give qualified audit opinion. Here he only obtained the audit evidence and misstatements are material and pervasive. It is with material misstatements, a very important misstatement, and it's also pervasive. Pervasive means it affects all the assertions. Like I told you, like sales, if it's disturbed, it affects the P&L everywhere, reserves everywhere, it is getting affected. So it's a huge mistake. So auditor obtained audit evidence and material and pervasive give the adverse opinion. And disclaimer of opinion, auditor unable to obtain audit evidence and concludes that misstatements are material and pervasive. See, they're just the opposite of this. Now just only things, this is the only thing. Audit evidence obtained or not. Material or pervasive. Just cross-linking with this, everything you will get it. Now I will give you the simple situation. Now you will understand it easily. Now let's just look at this chart. I will not say what opinion, you just think. Just only look at this chart. Just keep it this much. Auditor, I'll give you the scenario, you just tell me. Auditor obtained sufficient appropriate audit evidence. He got the audit evidence. That misstatements are material and pervasive. What should we give? Adverse, right? Adverse opinion, done. Then auditor obtained auditor unable to obtain audit evidence. But he concluded that misstatements are material and pervasive. Disclaimer, done. And the exact opposite is the other qualified opinion, done. You got it right, simple as that. Just keep that much in mind, not beyond that. That is only needed. So in your case also, they will not give you a scenario and ask you to say which opinion, nothing like that. But MCQs, sometimes they may do that. MCQs may do, but 2 marks you will be easily getting. Just the table in your mind is needed. If you want, like if you want the table, just someone, if you want, you can see this is simple definition of everything. If sufficient appropriate audit evidence obtained, material not pervasive, qualified. Not obtained, qualified. This is disclaimer. Done. This is the thing. Where is CMA enter? Okay. Same is written here everywhere. Then here also, but this table is a bit complex. I won't suggest this. Is like getting more complex. For me, sometimes may be easy for you. Then another thing is emphasis of matter. Now the chapter is getting finished. Emphasis of matter paragraph, other matter paragraph done. Chapter is done. Emphasis of matter paragraph means, I told you there are two things. Key audit matter is there. Emphasis of matter is there. Other matter paragraph is three things. This is a technical chapter, but it's easy, right? You're understanding this, right? Every chapter, this points. Whatever it is, with my half Tamil, I'll speak. So, key audit matter means when auditor is auditing, he identified some very important matters in the audit. Entire audit is done, but based on that, some very important matters will be there. For example, valuation of some assets. In that entire auditing was some crucial matter that he'll decide upon his judgment. That's his decision. Sometimes valuation of goodwill will be a very important matter. All the most important, the crucial matters which he thinks, he'll write about that in the key audit matter section. In audit report, there will be a section called key audit matter. He'll write about that, crucial important stuff. Then the secondary, emphasis of matter means all the item that is, some items that are shown in the financial statements. For example, assets, something, some sort of a asset or something that is shown, some disclosures given in the financial statements, but he thinks he need to give an explanation about that. For example, a disclosure of related party transaction is given in the financial statements. So management has just given disclosure of related party, only these two lines are given about that. But he think he need to give an explanation about that, so then only users will understand. Users means people who uses the financial statement will understand. So in audit report, he will say, he will emphasize a matter. That matter is already in the financial statements. He will give a reference to that and he will say, he will make it emphasize. He will write a detailed note about that related party transaction. That is emphasis of matter. Key audit matter means he is completely writing something new. Emphasis of matter means he is giving a reference of something that is already there. Other matter paragraph means something else. If you want to write, he will put it in the other matter paragraph. 3 is there. This is the concept. So this one, emphasis of matter paragraph means, emphasis of matter paragraph means if the auditor thinks it is necessary to draw users' attention to a matter appropriately presented or disclosed in the financial statement that is of such importance that is fundamental to the user's understanding of the financial statements. If auditor thinks it is necessary to draw users' attention to that related party disclosure, to a matter disclosed in the financial statement, that is related party cases, that is fundamental for users' understanding, for giving users more understanding, he will put emphasis of matter paragraph. Key audit matter means the most important matters. Emphasis of matter paragraph is a reference to matter already disclosed in the financial statement, but auditor thinks it needs more clarity. So he will refer that. Then these are the, so auditor can include emphasis of matter paragraph provided that, this can be a question, provided that auditor would not be required to modify the opinion. If he required to modify the opinion, then he should not include that in the emphasis of matter paragraph. Matter that has not been a key audit matter. If it's a key audit matter, show it in the key audit matter. Why should be it shown in the emphasis of matter? Emphasis of matter paragraph, when auditor include an emphasis of matter paragraph, auditor shall include a paragraph with a separate heading, emphasis of matter, include a paragraph, a clear reference to the matter being emphasized, give a clear reference to that related party disclosure, indicate that auditor's opinion is not modified because of the matter. That's it. In case of other matter paragraph, consider it is necessary to communicate something else auditor wants, he will communicate through other matter paragraph. That's it. Simply understand. These are the circumstances where other audit matter paragraph may be necessary. And while reporting on financial statements, when matter is relevant for users' understanding of audit responsibility, understanding of audit, done. Then this is just a small illustration you can go through. Audit report is also done. All the major chapters are done. Now the only 2 chapters are financial statements and different entity. Now we have like a smaller chapter. This is NFRA. Then internal financial control is there, that we discussed yesterday. You can just go through. It's a small chapter, nothing is there. Any doubt is there, just tell me, I'll teach you tomorrow if you want. Or I'll give a video, whatever it is. NFRA, National Financial Reporting. This is like a simple chapter, just read, you will get it. In internal financial control, we discussed everything. Now we have NFRA. And when NFRA is done, we'll go with sampling too. Then today's session is over. NFRA is very simple, but don't leave this chapter. Easily sometimes you'll get 7 marks from 2 pages. So don't leave chapters like NFRA, Secretarial audit, cost audit. It's small chapters, but don't leave it, because they may directly give you questions from there. Only 2-3 pages are there, everything. NFRA means it's a body, it's a committee of the government. Just keep it like that. It plans whether standards on auditing, accounting standards, etc. needs to be amended, or any new standards are needed. All these things. Okay. I was thinking, what was it? NFRA. Look, connection to 1 second. NFRA means now we have accounting standards, auditing standards, everything, right? But sometimes these people may find a loophole in all these things. In every law there is a loophole, right? Someone who killed someone also, with some loophole they are going out. This is what is happening, right? Everyone, some people who have murdered even kids, they'll find a loophole that they are mentally having some problem and they'll get out of the jail. This kind of loophole will be there. So similarly in accounting standards also, auditing standards also, there will be loophole which these companies will identify, and they will use that loophole to save crores of taxes. So NFRA is that one authority of India. They'll sit on top and they'll analyze, is there any problem with any accounting standard or auditing standard? Is there any company finding any loophole of that? So they will think of all these things. They will review they'll take some auditors and audit their auditing also. So purely they will decide whether any new standard should come in, or whether any new accounting standard should be there, new auditing standard should be there, or any amendment of any standard is required. So this is their duty. Also they will review the audit committee, everything. NFRA give recommendations to the about standards to central government, and central government approves it. If NFRA thinks a new auditing standard is needed or new accounting standard is needed, he will just put a number like AS 23, like something he'll put, and he'll give it to central government and they'll approve and give it. Then this is a structure of NFRA. It comprises of a chairman and 15 members will be there. This is NFRA. This is NFRA. It comprises of a chairman and 15 members. Then following committee will take up NFRA: Accounting Standards Committee, Auditing Standards Committee plus Enforcement Committee. These 3 together is called NFRA. Then what is the function of NFRA? Recommend the accounting policies and auditing standards to be adopted by the company, monitor and enforce compliance with accounting standards and auditing standards, oversee the quality of service of professionals associated with the ensuring compliance with the such standards. That is, they oversee the quality of profession associated with the standards. Which is that profession? CA, CMA, CS. We are associated with auditing standards, accounting standards, right? So they'll oversee our quality, audit quality, your cost audit quality, everything they'll see. Perform such other function and duties as may be necessary. Okay. This is NFRA's role in auditing. In case of auditing, their role is to NFRA recommended to the central government auditing policy standards to be adopted by company, everything. NFRA shall receive recommendation from Institute of Chartered Accountants of India on proposal for new accounting standard or auditing standard, everything. Then may seek additional information what they need. If ICAI, Institute of Chartered Accountants of India, they will give their recommendation to NFRA, and NFRA will consider all this, make a new accounting standard or something and give it to the government. The government will pass it and okay, make it legal, and now then you will have to study about that in your book. They'll put it in your book. All the standards, everything you studied is made by these damn guys. If they have not made the standards, you would have not studied that. Then another function, this can be a question, you just read it, it's very easy, nothing, whatever we have learned, same things are mentioned here, similar to that. I'll just read 1 or 2 points. Monitoring and enforcing compliance with auditing standards. For the purpose of monitoring and enforcing compliance, auditing standards authority may. The authority means NFRA may review the working paper, evaluate the sufficiency of quality control system of auditor, perform such other testing of auditing. All these things he will do. This means he need to check the quality, NFRA need to check the quality of auditors. So he'll pick one firm, one auditing firm he'll pick. Then he'll look whether the quality control system in that auditing firm is proper. Quality control means to control to improve the quality of auditors, articles, everything. They'll have a quality control system. Every company has that. NFRA will check that, whether it is good or not. NFRA will review that auditor's working papers to see whether everything is sufficient or not. Then he'll perform other testing, whatever he needs. Simple thing, you can understand this. Then auditor may seek additional information or may require personal presence of the auditor. That is, NFRA may call the auditor to ask something. He has the power to. NFRA performs monitoring and enforcement activity through officers or experts. NFRA will have officers and experts. They will perform activity. Simple things, you can go through that. Then power to investigate also they have. That is, investigate any matter of professional or other misconduct. They can do that. Any matter, and investigation into any matter for compliance or oversight activities they can do. Undertake suo motu investigation into any matter of professional or other misconduct also they can do. These are the 3 cases where NFRA can conduct investigation. First is relating to any professional or other misconduct. A CA did some misconduct, some mistake, he can do that. Undertake investigation into any matter on the basis of compliance or oversight activity, he can do that. Suo motu investigation also he can take against any professional or other misconduct. Done. This is simple area. NFRA is simple topic. But in NFRA, I will give you what you need to study to get the 7 marks. This functions, this is a small question. It comes for only 4 marks. This you study, just study this function you can keep, and this other things you leave it. Only this you study from NFRA. This is the most important area. If they are asking for a 7-mark question, only this will be asked. And only 7 points you need. Here it is 8, just study 7. What is easy for you? And this too, normally 3 marks question will not come in your paper, right? No 3 marks question, right? Only 7 marks. Bigger questions is there. So this is not that much relevant. Still 1 or 2 points if you want, keep it. But don't skip this point, this one and this one, because you may think this is only 4 marks. This is only 4 points, but they will ask you this much. So then it counts to 7. NFRA constitution, that is, it consists of 1 chairman and a member. 1 or 2 marks goes for that. Then 1 mark for this, 3 marks for this, 4 marks or 3 marks for this. Easily 7-8 marks is gone. So we are done with the toughest areas. You have any doubt relating to company audit or anything? Got the clarity on important areas, right? Other areas I am just reading and going. It's not that important. Now we will go into that audit sampling. Yesterday we left one topic. Hopefully we can finish early today. Oh, super. Tomorrow it is scope of auditing. Where is it? Sampling. Sampling is super. Yeah. Sampling means do you need break or let's finish it fast? Yeah? Finish it. That will be easy. Energy is there. Yeah. SA 530 audit sampling. So it means I am an auditor and I went to audit boat. And they gave me, I asked them, give me all your sales bills because I need to check the sales, right? They gave me 3 lakh sales bills. Can I check these 3 lakh sales bills? Practically not possible. And every single day, at least 10,000 units of earphones of boAt is sold. So we cannot, that much sales will be there if you take 365 days. At least 3, 4, 5 lakh units will be sold. You cannot check everything. So how do you check whether sales are correct? Sampling. He'll take, if 3 lakh units sales bill is there, auditor will pick, if not 3 lakh, put it like 1,000 sales bills are there, he'll take around 50 sales bill from that and he'll check those 50. And if the 50 is okay, he assumes that the entire other 950 is also okay. That is what we call sampling. Imagine you are cooking a rice. You will only take a spoon of rice to see whether the entire thing, or you will eat everything and no, right? 100% you will only take a spoon. This is what we call sampling. Okay. So we'll move faster. What are the benefits of sampling? It reduces the workload, save time and cost, simple stuff, go through it. Then what are the factors to be considered for auditing? Objective of audit, nature of population, this is also not that much important. And I'll give, this is important, sorry. What are the factors to be considered for audit sampling? Sampling. First you need to, before you do sampling, first to see the objectives of audit. What are the objective? What is the aim of auditing we want to do? Because when you're cooking a rice, our aim is to we have a very good meal with chicken, fish, everything, right? So similarly, when auditing also we have an aim. What is our objective? To obtain a reasonable assurance about finance, that thing. Next, nature of population. Nature of population means 1,000 invoices is there, right? This 1,000 invoices is what we call population. Population we call. Rice, 1 kg of rice we put it in the vessel. So 1 kg is population. Then we'll see the nature of population. What is the degree of heterogeneity? Homogeneous means similar. When you put 1 kg of rice, all the rice are similar, right? So one brand, basmati rice, everyone is basmati. So it's a homogeneous population, means everything is same. Heterogeneous means you wanted to cook a basmati rice with some ponni rice with some other rice. You put 3 types of rice mixed into a bowl. So you cannot know which kind of a rice is there. So it is a heterogeneous population. Some are basmati, some are ponni, some, but you don't know where it lies. Similarly, in the invoices also, if you take 1,000 bills, one by one is here, at least 300, 400 bills will be expensive bills for like expensive earphones, like boAts, 5,000 rupee above in the earphones. That may be 500 bills. Other 500 or 200 bills may be very cheaper earphones, below 1,000 earphones. Other 300 bills may be a medium range, 2,000, 2,500 earphones. So here it's actually heterogeneous population. And so you can split it if you want. You can take all the 500 of expensive items, put it, all the 300 of medium items, all the 100 of low quality items. Then what you'll do, you'll pick a sample from each of them. It will be better, right? Because you simply from 1,000 it is bundled together and you're picking 3 samples. So it may be, one may be, okay, 1,000 rupee sample, but the 3 may be sometimes 1,000 rupee sample itself, 1,000 rupee bill itself. So you will consider as, okay, the sample is only this much. Don't do that. I'll tell you why. This is the nature of population. Heterogeneous or homogeneous. 2 are there. Then internal control system of the company. Just see that. Because if company is having a good internal control, if inventory, this much inventory is kept here, company is having a really good CCTV there, should we even do audit procedure? No, right? Because internal control is so good, no one will steal anything. But if it's a bad internal inventory CCTV there, then we need to do more sampling. If good inventory was there, we'll only 1,000 units of inventory is there, good internal control is there, we'll only check 3 or 4. That's enough because it's okay. But if internal control is bad, we have to check like 500 of the inventory because we don't know what lies in the inventory. Then materiality of the items, see whether it is important item or not, see the sampling risk, non-sampling risk and tolerable error. Sampling risk means the risk that I took the vessel is there. 1 kg of rice is also there. Not one, I'll give a better example. Everyone eat fish, right? Majority of at least. Vegetarian, pure vegetarian, pure vegetarian, 1, 2 are there. Okay. Imagine like just for the sake of things, or instead of fish, what is one vegetable we can put? Paneer we'll put. Paneer, do you put on tawa and eat it? Like, I don't know, I have not eaten paneer that much. I only ate paneer when I went to the north. Like we go north, it's pure paneer. Because that was on a bike ride from like Kerala to Kashmir we went. So there, till Andhra, Telangana, all those area. Till we reached near to Madhya Pradesh area, food was okay. Like South Indian food we are getting decent. From Madhya Pradesh, it was like paneer, only paneer. Paneer and roti, and aloo paratha and some curd or something. 40 days I struggled with that. And when we reached Delhi we got best Kerala food. Like that was so good. And then we went to entire Ladakh, came back to Delhi again. Then only we got a good food. Till now, then we were only having this dried chapati and this paneer thanga. Sampling risk means you put 10 paneer pieces on a tawa pan, like a dosha pan, right? Tawa pan, you put 10 paneer pieces to fry. And you are frying it. So, to check whether it has been properly cooked, you took one paneer. I'll show it like this, then only easy for you to keep in mind sampling risk. This is the tawa. You put 1 paneer, 2 paneer, 3 paneer, 1, 2, 3, 9 paneer you have kept. To see whether it is properly cooked, you will pick this 1 paneer. Okay. But this may be properly cooked. But then you told like, okay, everything is cooked and okay, you went fine. But when you served the food, this one may not be properly cooked. That is what we call sampling risk. You finalized a conclusion that paneer is cooked from just by searching one sample itself. You finalized a conclusion, paneer is cooked. But that conclusion was actually different from the real scenario. The real scenario was paneer was not cooked. Only sometimes this side heat was more, these 3 would have been cooked. So that is what we call a sampling risk. You derive a conclusion from a sample, but that conclusion was actually different from the actual scenario. Actual scenario was different. That is sampling risk. So sampling risk, non-sampling risk means when you are doing the sampling thing itself, all the other risk, other than sampling risk, other than this paneer risk, everything else is sampling risk. Keep it in mind. 1000 bills with me, I can either simply close my eyes and pick 3, according to my judgment. That is non-statistical sampling. We are not using any method to do the sampling. We are simply just closing eyes and picking any 3. That itself may be a wrong answer, we will get wrong conclusion, just like the paneer case. We may pick 3 samples, but the actual conclusion may be different. We may pick these 3 samples, but the 3 samples may be of that 1000 rupee earphone sample. So we may conclude all the bills are of 1000 rupees. It's not practically wrong, right? Actually, we need to check others also. So non-statistical means without any mathematical, statistical things, simply closing your eyes and picking it. Statistical sampling means here we are more scientific. Here we are using some methods for sampling. We will apply some methods to take the sample. The first method is called random sampling. In random sampling, we have simple random sampling. Simple random sampling, each unit of the population has an equal chance of being selected, and we are using a random number table or computer program to select a random number. I will show it to you, then you will understand. I think I have that. I show it is not there. What was that I did? Excel. Sheet itself. Imagine, just I will show it to you. Why am I not able to write? I have not paid the paid version. This is. Ayyo. What was this? Okay, 1 second. Where is it? I'll show it to you like this. Then you'll understand. Draw it and show. Random sampling means normally the bills will not be like this. It will be in the Excel or some format. No physical bills, nobody will keep it like. So it will be like you have invoices, invoice number 1, 2, 3, 4, 5 till 1000. All the invoices are there. Then the value of the invoice will be sometimes 100, sometimes 1000, sometimes 2000, sometimes 1500. Some value will be there like this. So now the option for you in normal sampling is you may pick this, you may pick this and do the sampling in non-statistical. In statistical, what you will do is you will put an equation here. In Excel, you know how to put the equation, right? You will put 1 plus equal to plus. That we will do, right? That is what we call. In the equation, we will put one equation, that is RAND Simply we'll do this. RIND bracket bracket. It means random number. We'll put that equation here, here, here. When we put this equation, press enter. What happens is a number between 0 and 1 comes here. Some random number is coming. We don't know what number is coming. Here sometimes it will be 0.001. Here maybe 0.989. Some number will be coming like this. Then we'll close this area and we'll pick some 1, 2, 3 from this. From this numbers we'll pick 3. We don't know the actual value of the other sample, right? We may pick 1 or 2 samples from this. This is called this simple random sampling. Simple random sampling. You don't have to understand all these things, but I'm just giving you how it actually works. If you want, I can show it in the Excel. Do you want? Or this is enough? This is enough, right? Don't need a over explanation of that. No question will be coming. Then stratified sampling. Stratified sampling is very important. This is what we call stratified sampling. You had invoices, invoice number 1,000, this bill will be there. Here you will divide it into different stratas, different segments. If you closely look, I divided it into invoices from 0 to 500. So here I can get 0 to 500, that is this 300. All the invoices in the range of 0 to 500, I put it here, 500 to here, 1000 plus or invoices. Then I divided everything like this. So here I have 3, this 3 is what we call strata. That 0 to 500, 500 to 1000, 1000. That is what we call stratas. And the information inside the strata, this one is what we call stratum. Stratum. And we'll pick sample from this now. This will be the perfect sampling because we divided the population into proper segments, and when we are picking one from that, one from this, one from this. So that sample is a representative of the entire population. One sample of that segment will represent all the bill from 0 to 500. This will represent all the bill from 500 to 1000. This also. So this is what we call stratified sampling. We'll divide things into stratas and select from that. That is stratified sampling. Then systematic interval sampling. Interval sampling means selecting the item using a constant level between selection, with the first selection being random. That is, many invoices are there. You just say a number, like for example 25. You will select the first bill, then the 26th bill, then the 51st bill. 25, 25, 25 order, you will pick samples. Then monetary unit sampling, monetary based on a monetary value. We'll put uses a monetary value of transaction. It is also known as value based sampling or value weighted sampling. That is also, this is what we call value weighted sampling. Here the entire thing was there. This is the thing you will get. Ram is equal to debtor 10 lakh. Rahul owns all these are debtors. They have all this much money to us. In this case, now what will happen is that these debtors, we'll divide these debtors into, if you closely observe, see, this debtor, the total is 60 lakh. Total is 60 lakh, but you see here 15 lakhs, 18 lakhs, 13 lakhs and 10 lakhs. These four debtors are creating the biggest value in that. In the entire 60 lakh, these 4 debtors are constituting 56 lakh. So we will pick those people on top. Then we will select sample from that. We will arrange them based on value and we will take sample from that. That is value weighted selection. Large value items will be arranged properly. Value weighted selection. That is selecting sample based on the weight of value. Weight of value, size of value. That is value weighted selection. And multi-stage sampling. Multi-stage sampling suitable when the data are stored in more than one level. For example, organization may have stock stored in number of shops. Here the first step would be to randomly select a few shop and then to randomly select a few stock from the shop already selected, and if uploaded cautiously, this is very easy. 5 branches are there, go to each branch, take 1 or 2 stock from there, check everything together, that's it. They can easily ask you this question, what are the approaches of sampling? 7 marks. Straightforward there they can ask this, because 1, 2, 3, 4, 5 points are there and this one will carry 2 marks. That means 7 marks easily. There are approaches to sampling. Approaches to sampling, and this one also you study, factors in sampling. Then risk associated, I told you, sampling risk, non-sampling risk. Then stages in sampling, sample design, size determination, sample selection, not that much relevant. Then auditing techniques. Yeah, what are the different auditing techniques you do? Routine checking, test checking, auditing in depth, cutoff. This is also, I'll just see. Routine checking, procedure to check whether the transactions are properly entered in books of accounts and whether the posting is carried forward has been accurately done. Routine checking means you are the auditor of a company. You'll do some routine checking every day, every 3 months or 3 weeks. You'll do an audit and go. That is what we call routine checking. Simple as that. Then it is a test checking, same as sampling itself. Once in a while you go, 10 things are there, pick 1 or 2 from that. That is test checking. Large organization with a huge number of transactions, conducting a detailed examination of all the accounts becoming mounting task for the auditor. Thus, auditor selects a few samples and do the checking. You read it, you will get nothing. Test checking. Auditing in depth means you will take 1 or 2 few items and you will go deep into that. From the entire sales, you will pick 5 sales. You will go deep and see whether any fraud is there. That is auditing in depth. Then cutoff examination means, cutoff means all the transactions in that one accounting year. That is what we call cutoff transaction. Cutoff, you will say, for example, if you have to check the transactions of May, then 1st May to 31st May is there. That is a cutoff period. That is cutoff. You will make a cutoff. You will make the entire year into a small chunks and you can do transactions like that. Or you will take the whole year together as one cutoff. 1st April 2022 to 31st March 2023. All the transactions in that period you will do. Check. That is cutoff. These are different methods of doing it. Not, they will sometimes ask you to write what is cutoff examination or something. Most probably the direct question, this one will be the question. Stages in, not this one, approaches in sampling. That will be the question. So that is why I focused on that too much. This and all, it's then walkthrough test. Tracing 1 or more transactions through accounting system and observing how it is actually passed through the internal control system. We picked like one sale or something from the accounting system and see what was the internal control over those sales. Who authorized the sale, when the sale comes in, who records the money, all the internal controls related to the walkthrough test. Now the important area is only that area. This also, whatever you can, you study these headings. And here too, routine checking is good. Test checking also you can study. Auditing in depth is not that much. Cutoff examination you keep in mind. Surprise checking is also important. Oh, surprise check, I forgot. Surprise check means normally cash in hand will be there in the company, right? I told you this last day. Surprise check. Something I told you, I guess. Yeah, surprise check means normally cash in hand will be there in a company, right? Auditor has to go and verify the cash in hand. 2 options are there for him. Either he can say to the management that I am coming on 31st March. Keep the cash ready for checking. If there is any fraud, they will arrange the cash and keep it ready. Auditor cannot detect anything. So let the auditor do that. That is okay, audit procedure. But surprise check means suddenly on one day he will go and ask the manager, show me your cash balance, show me your cash balance. So he will show in the cash book the balance will be, or in the balance sheet the balance will be, for example, 10,000, not balance sheet. Cash book the balance will be 10,000. Now show the 10,000 in cash. Show the cash in hand is 10,000. That cash should be there in the drawer, right? So ask them to show 10,000. Sometimes only 7,000 will be there. Where is the 3,000? That is when we identify a fraud. This 3,000 will be in his pocket. He would have taken it. That is what we call surprise checking. Sudden and go and check suddenly without giving any notice. Auditor also conducts surprise test for some material items without any prior communication with the client's office to increase the efficiency of the audit. Next is analytical procedure. I told you yesterday, I taught you this, right? Comparison of plausible relationships. Analytical procedure means last year's gross profit with this year's gross profit. Comparison. This is what we call analytical procedure. Last year's gross profit ratio, this year's gross profit ratio. Comparison of financial information with the financial information, or financial information with the non-financial information. Last year's or this year's itself, this year's profit with this year's volume of goods sold. Financial and non-financial. That is analytical procedure. It means evaluation of financial information through analysis of plausible relationships, logical relationships among both financial and non-financial data. Evaluation of what are you evaluating? Financial information, gross profit, sales, all these things. Through analysis of plausible relationship, logical relationship between these two among financial and non-financial data. what is this? Nature of analytical procedure include analytical procedure consider comparison of entities' financial information with the comparable information of prior period. This year's information with the prior period information. Comparable information. This year's gross profit is comparable with the last year's gross profit. Same. Then anticipated result of the organization like budget, forecast, everything. What is today's sales? Last year we budgeted. We created a budget. Then next year we need to get a sales of 10 crore. And now it is the next year. Now next year when we are looking, the actual sales is only 9 crore. So he will consider this 9 crore sales with that budget together. There we anticipated 10 crore. So we will have a projection that April month we will do 30 lakhs of sale, May we will do this much sale, and the total 10 crore in the next year. That will be the projection last year. This year the actual figure is there, what we did. He'll compare both and identify some relationship. Why we are not able to reach 10 crore, in which month we lost in sales, all these things. That is this one. Then similar information of any other comparable entity belonging to the same industry. Zomato will compare their financial statements with Swiggy. You can see like what is the sales of Zomato with Swiggy. They can compare and identify what is the driver's expense, the delivery partner's expense Swiggy pays and Zomato pays. They'll compare and they'll get an idea. Swiggy pays only very less amount. I am paying too much. I need to cut down on that. That is what we call analytical procedure. He'll compare and identify something from that. Analytical procedure means comparison. Just think like that. Nothing more than that. And then comparison and consideration of relationship among different items of financial data that is expected to follow a predictable pattern like the operating profit margin. Compare last year's operating profit margin, this year's margin. Same things what I told, that's it. Then application of analytical procedure. Where can we apply the analytical procedure? We will apply it in first in audit planning stage. When we are planning, we will apply analytical procedure. On substantive testing, detailed checking testing stage also we will compare. Starting also we will use comparison. In the middle also we will use investigation of unusual items also we will use analytical procedure. Overall conclusion stage also we will use it. That is not that important. Then tools and techniques for analytical procedure, trend analysis, testing of reasonableness, ratio test. This is when we compare last year's sales, last 3 years sales we took, 2021, 22, 23, 24. When we are comparing the sales, we will get a graph like last year it was this, then this, then increase, decrease this. This is what we call trend analysis. Every year's trend will get an analysis. So application of the following tools and techniques. First is trend analysis we can get. Under this third, fluctuation of amount of any item over the years, 1 or 2, 3, 4 years. Trend analysis. This. Then testing of reasonableness done by comparing certain items or account balances with other account balances. Raw material consumption to production we will compare. We will get an idea. This year's raw material was 10 lakhs. We produced 15 lakhs units with 10 lakh raw materials. So utilization was so good, 1:1.5. That is a ratio. What was last year's raw materials to production? Last year it was 1 lakh raw material. We created only 1.2 lakh. So last year it was 1:1.2. This year it was 1:1.5. So we are so good at this. That is a reasonableness test. Then ratios analysis. Last year's gross profit, this year's gross profit, we will compare and analyze. Source of information like budgets, management, everything also we will analyze. Then scrutiny of trial balance. Trial balance, you know what it is, trial balance, right? That thing simply written there, just read it. Then grouping schedule means grouping the ledger accounts under proper heads. Simple, like this one. PPE, all the things coming under PPE, we will group it here. You just read it, that's nothing, it's very important, easy stuff. Intangible assets, we will keep it. For example, current assets, trade receivables, cash, that is what we call grouping schedule. Nothing very important on that. Then auditors role with the grouping schedule. This is somewhat good. This is what is auditor's role in grouping. Management itself group everything and give it to us. So what is our role in that? First, see the composition of grouping schedule for various line items of the financial statement has adhered to the prescription of relevant regulation. Just to see the composition of grouping. That means the grouping given by the management. All the assets, current assets under current asset head. All the big fixed liabilities under fixed assets under fixed assets head. This will be properly grouped and given to us by the manager. Just check whether it is as per the format. There is a format given to us, right? All the assets which are less than 2 years comes under current asset, these things, less than 1 year. That the composition of grouping schedule given by the management has adhered to the prescription of relevant regulation, that is applicable financial reporting framework, Schedule 3. Schedule 3 balance sheet format, it is same. Composition of grouping schedule has been decided only by the person authorized for this purpose. Make sure the format is made by a qualified CA person or senior person who plans that. Appropriate summary customization of the accounting software has been done to meet organizations' accounting and reporting requirements. Sometimes we may be using Tally now. So sometimes till last year we were only having 1000 sales, but till this year we were having 2000 sales. So Tally is not enough for us. We need to update a new software. Make sure that has been done and proper reporting requirements are also ensured on that. Appropriate customization of accounting software. Last year it was Tally. This year we may need Tally Prime. Has been done. That has been done to meet organizations' requirements. Or Tally to SAP, Tally to other busy softwares are there. Composition of grouping schedule has not been altered without appropriate authorization. Nobody has changed that format. Simple. This much is enough. Then that chapter is also done. Then here this is audit trail, everything. Do you want to do it today or tomorrow? We will finish it today itself. This is a small chapter. Just 1 second, I'll just come. We'll finish it this. It's a small chapter. 10 minutes, 15 minutes. What happens? There is a problem when you wear contact lens, you will have. Itself I cannot see. If I wear it, the power will even increase. And is it expensive to maintain? Like I heard, daily like we need to replace it or something. 40 weeks. And what is the cost of one pair? 2,500. 6-month basis. So that is like a cheap thing. Like yearly 5,000 is we are spending. Yearly only 5,000, right? Solution. That's not that expensive, right? I think I need to buy one. Auditing in an automated like Bro, this is the last chapter, today's last chapter, just 10 minutes. People know this chapter. It is a technical chapter. Only study what is important. Don't try to understand too much about this. Nothing is needed. Just a small chapter. Relevant area, study and go. If the question comes, 7 marks you get. Done. Here in auditing, the core chapter you need to study. Financial statements and entity, which we teach tomorrow. That is an important chapter. Then audit report, company audit, cost audit. These three. Because cost audit you require anyways. Company audit, paper will be there, question will be there. Audit report also important. Then the first chapters we learned yesterday, third chapter, that risk assessment, further audit procedure. That's enough. Other chapters, something do and finish it. Then application of technology in auditing in an automated environment. What is an automated environment? I'll tell you one thing. Blinkit and Zepto, Instamart. I'm leaving a number. Anybody frequent ordering of through any of this? Anybody who's doing frequent ordering daily? Nobody, right? Only me. I order 2 times a day. On every single day, more than 70 or I got that premium badge from Zepto. I told you, like 100 orders in 1 month I did in Zepto. What happened was, because I order small things. I only shifted to Chennai recently, right? So all the floor mat, I'll order 500 rupees, then you can order. A cart value exceeds 500 rupees, then you can get a free delivery or something. So I'll order like 2-3 floor mats. If I want, I can order everything at one order, but that I won't do. I'll order 2-3 floor mats and one like a hand wash or something. Then after 2 hours, I'll order other things. Like this I used to order. I completed this. But one thing let me ask you. I used to get delivery in normal, under 15 minutes max. Under 15 minutes, I used to get delivery. They promised 10, but under 15, I used to get delivery. Blinkit too I get. Instamart takes me around like 25-30 minutes there in Ambattur. Zepto is too fast there. Blinkit is also too fast. Now let me ask you how they are doing this. Just imagine a shop. Just imagine a shop. Even if I call you and tell you, you have a delivery boy standing ready here. Even if I call you and tell you, this person, the shopkeeper, and I ordered 3, 4, 5 items, like 1 kg of rice, 2 kg of onion, 3 kg of something. I ordered many things like this. Will this shop be able to deliver to me in 10 minutes? No. Because a physical person need to go and do this but how Zepto is doing that? Automation. That is what we call automated environment. Means, if you go to these warehouses, you can see one thing. There will be like not in Kerala, I don't know whether they're doing it. Not in like Chennai, I don't know whether they're doing it. I've seen in different videos how the automation of these kinds of software the companies do. They have like a very big conveyor belt, like something like that. And all the products will be kept. When we ordered something, the product will give 1 kg of onion means 1 kg of onion automatically goes there. You will get all these things in your. It comes to and put it in a packet and you will get it. This is in America, it is happening. India, Zepto is not that much up to the mark, but still they have automation. Everything is kept at the proper places. They will put and pack it and get it. It is actually automation. This is the reason why if you don't automate, you will not survive in the next 10 years. Every company needs automation. So that is what we call an automated environment. For Zepto, the automated environment will be there. The moment an order comes there, every product is filled, the thing is done. The delivery boy, the product comes to the delivery boy directly. Just take it, deliver it, done. That is automated environment. Every company has this. Every company, if you take a look at, we can say automation in terms of THARUN'S Brainery also. Even if THARUN'S sir is not there, it's not automated. Everything is automated. I don't need to be here like that. So what is the benefit of automated? Advantages: accurate data processing, can process high volume of transactions easily. Thousands of orders on Zepto, easily they are processing it daily. It makes business process faster. 10 minutes delivery we are getting it. Then improve control efficacy and security. There is no chance of fraud because not a person is not doing this. A machine is doing this. Then minimizes human error because humans is not there. Machine is doing. Then it offers better integration among business processes. Simple. Then these are the components of automated database, operating system, hardware, network, all these things. Then areas of use of computer in auditing. Everywhere computer is used. Preparation of detailed programming, checking the validity, consistency of reasonableness of entry. Just study 7 points. Any easy points, keep it. How computer is used in auditing. And then this is one important area. In application control, input control, what's it, 1, 2, 3 pages is enough. What are the controls in an automated environment and auditor's role relating to that? Control in an automated environment, auditor's role relating to that. Control. I would suggest learn this easily. Application controls are checks built into the softwares. I'll tell you what it is. Built into the, these are checks built into the softwares to ensure that data is correct, complete and accurately processed. For example, if you have been into, have you ever used Tally? Tally software? Not used Tally. You'll use it in 2 months. Like once you get the result, first group is cleared, right? So you'll be anyways getting it. Tally, in Tally, if we enter a transaction from like without the name of the debtor, we entered the amount, everything, but forget to enter the name of the debtor. We cannot save that entry. That entry will not be saved. It will be a red color thing will pop up there. That is actually application control. Application control means that is actually a application control. So these are actually checks built into software. This is a checking mechanism built into the Tally, built into the software to ensure that data is correct, complete and accurately processed. If that that system is not there, without the name of the debtor, the entry will get in. What happens? It says here the name is not there. Whose money is there? We don't know. So we put that application control in that Tally so that no entry will be saved without the name of the debtor. That is what we call application control. Put something, so if a simple thing, if you go to any government website to purchase something to or Flipkart itself, you put something in the cart, you put everything and your address, everything, there you forget to enter the mobile number. The order will not get placed. It will be showing like that. If that red thing, that mandatory thing is not there, what will happen? Order will get placed, your money is also gone, but where the order will be delivered? A double problem. So that box, mandatory box, is an application control. A check put inside a software to see whether data entered is proper, check correct. That's it. Input controls. Input controls means designed to ensure that input is authorized, complete, accurate. Input, and input means whatever data we enter into a system. What I enter into Excel, like the name, invoice, that is what input. Then first thing in that is range check. Range check means, see these are examples. Example, set a range limit. Example like age 200 will not be allowed, right? In any government form or something. Where I am saying about the range check. Input, first is input controls means take the Flipkart's form. You put a product into the cart, you want to place an order, a form will come, right? Your name, address, location, pin code, everything written. Think of that one form. We are inputting data. We are inputting our name, address, everything. So the controls there is what we call input controls. This is input controls. First is range check. There, imagine there is a tab called age, where we need to put the age or where we need to put the date of birth. Can we put age as 200? Not possible. Immediately, if we put more than 100 itself, it will show some sort of an error. Some error will come. Why is that? Because that is range check. When they are building their software, they have kept for age, the maximum limit is 0 to 99. So any amount above 99 will be rejected. That is a range check. Got it, right? Then next is compatibility check. Compatibility check means ensure that data input from 2 or more field is compatible. That means invoice amount is 1000, but GST is given as 500. It is not compatible. Simple as that. Because invoice maximum GST is 28%. You have learned that, right? So 280 for 1000, the GST should be maximum 280, but we entered as for 1000, we put it as 5500 in GST. Immediately it will show an error. That is what we call compatibility check. Rama. Rama இப்படி பார்த்துச்சு லெக்சர் பார்த்துட்டு இருக்கியா? ராம் எல்லாமே இப்போ ஆடிட்டிங் law எல்லாமே பார்த்துட்டு இருக்கேன். So yeah, Example, invoice amount is equal to 1000, but GST is given as 500. So obviously not compatible, error will be shown, and that error is because of compatibility check. In the range error because of range check. Then validity check. Choosing validity check means there is an option for payment. There are many options they have written. Imagine we can also suggest one option, and we are putting as barter system, right? We give coconut and they give jackfruit. This is what we call barter system. That is like an invalid thing. It is not valid at this point of time. That things comes under validity check. In a software, it comes under validity check. Then exception check. A report showing issues highlighting the item. That is what we call an exception. If a new customer places a 10 lakh order, it shows as an exception. That means every company will have something called exception report. Exception report means if there is something suddenly new in the company or some sort of an error in the company, immediately report will be generated. Just understand it like that much. Simple example I'll give you. In Flipkart, the normal transaction value, what is the most expensive item on Flipkart? Just tell me. What is the most expensive item on Flipkart? As per your knowledge. Most expensive. Flipkart? Watch. What is the maximum price? 1 lakh. There is an iPhone 15 Pro, 16 Pro, 1.8 lakh, 1.6 lakh. Even more expensive. Think there are many items more expensive than that. MacBook, 2 lakh above. Bike. Now we can buy bike through Flipkart. Bike and scooter we can buy through Flipkart. Search, you will get. Seriously, I am saying we can buy bike through Flipkart. So very big expensive items are there in Flipkart. So the maximum expensive, most expensive item may be a Triumph web bike or some Bajaj bike, 5 lakh rupee. That is the highest expensive bike item on Flipkart. Think like that in India. And suddenly, normally Flipkart, the maximum order value is like 2,000, 3,000. Everyone places around 3,000. 10,000 is a maximum normal range of order. Someone once in a while places 1 lakh rupee, an iPhone or something. But suddenly someone placed a 10 lakh rupee order on Flipkart. 2 bikes or 1 bike, an iPad, like an AirPod, iPad, MacBook, everything. Something. So suddenly Flipkart's app will generate Flipkart system will generate an exception report. Someone has placed a 10 lakh order. It may be some sort of an error, or check what it is. That is what we call exception report. Exception check. If something suddenly not used to is happening. Imagine now the class is going to over. Some guy comes in, I'm ready for class. Comes now and sitting. That's an exception. We have not seen him. Just imagine I'm standing here and a new guy is coming. Sir, teach me. I'm a bit late. I'm a small minute. I just am 6 hours late. Coming and sitting here. I will show what skill I have with me. So that kind of a people, imagine that's an exception. Suddenly I'll react, right? Suddenly someone will, the down also will react. Yesterday some guy came in at 3:30 to attend the class saying 6 hours late. So these kinds of things will happen. This is what we call exception check. Exceptional. What is an exception? Okay. Then sequence check ensures that things are in the order. For example, invoice 101, 102, 103, 104, everything is correct. But invoice 103 is missing in that, immediately it will pop up. 103 is missing. That is sequence check. Then control check, control totals. Confirm the total value matches before and after the entry. Before the entry, simple example, Flipkart, first you put iPhone 16 Pro. So in the cart, the value will be 1,50,000 plus some shipping expense or something. Just think total everything 1,60,000 is the value. 1,50,500. That is the value coming in. Okay, before you put it, and now you want to buy a MacBook also. So before you put the MacBook, the value was 1,50,000, correct, right? And now you go to MacBook and add it to cart. Another 2 lakh is added. Now the value is 3 lakh. Immediately the total exactly is correct, right? That is what we call control total. That is before the entry, the control was correct because iPhone's price plus shipping price. After the entry of MacBook also, total is correct, not the same. Total is correct, right? 1 plus 2 plus shipping. That is what we call control totals. Then digit verification, cross check about the digits, all these things. Then processing controls, no one will ask you, but ensure that all data are processed correctly and data files are appropriately updated. Sometimes don't think they will not ask you since it is small. They can ask you directly like about explain process controls, output controls and master file control. 6 marks or 7 marks you can get. Process controls means if government put 1000 as government, if you if you put, I itself wrote this example at night yesterday, so else I'll not forget, sometimes I'll forget, that is why. If you put 1000 rupees as purchase, system auto processes GST, that is what we call processing control, means the processing is correct. In Tally, if you have used Tally, you may know, debtor's name you put, item you put, the taxable value of that bill is 1000 you put, automatically the GST will compute there. Into 18% GST will automatically come. That is processing tool, that amount is processed. Then output controls, ensure that all data is processed and output is distributed only to the prescribed authorized users. Imagine in a bank statement, if my bank statement is only available to me only, it will be only available in my data. The bank in the computer in the bank, they may have thousands of bank statements, but there is some software inside that which makes sure Sudarshan's bank account is getting to Sudarshan only, and your bank account, I will not get your bank account. That is what we call output control. All the outputs, all these things are something that is inside the automated environment. A bank or a business will have lot of controls like this. I told Flipkart will have all these controls. Range check they have, everything they have. That their entire automation process, they have all these things. Master file control, protect the main data file from being changed without permission. Master file, for example, customer data will be there with the Zepto, all the customers data. Nobody can access that and nobody can change that. That is master file control. Then testing methods, let's read it, you will get. Then audit trial, I told you right yesterday, this one, and not today itself. Audit trial, I told you, I remember. Audit trial means, what is audit trial? Someone tell me. I taught you today, I just simply explained it. Anybody remember that? In example I told you. Yes, correct. Sequence of, for example, a sale happened. What is the process of a sale? Someone sale done. So sale will be entered in the books. With that, debtor will also be entered. And from that sale, it is posted to trial balance. It comes to P&L. It comes everywhere. So, and the debtor also. Debtors occurred from that sale, right? Debtor also, sometimes the cash may be received. The cash may not be received. 3,000 rupees sale, sometimes 1,500 may be received. Half debtor is paid. All these things will be there. But the moment you click at sales, you will get a history of all these things. This is what we call audit trial. The documented flow of transaction. The flow of a transaction is documented. That is audit trial. Documents, records relating to a transaction that enable the auditor to trace is the keyword, trace the transactions from the source document, invoice. What is the source document of sale? Invoice. From the invoice to the summarized total in the accounting report. From a sale happens from the invoice to the P&L. What are the things that happened in between? This is audit trial. Then statutory requirement for audit trial. Every company which use accounting software for maintaining books of accounts shall use a software which have the feature of audit trial. And edit log also. Edit log means all the changes are made in the edit log. All the companies need to use accounting software which has this audit trial feature. When you click it, you need to get everything. In Tally also you can see, if you click one sales entry also, there is a trial of all that if you go behind that. Audit trial. Then edit log is this is a technical chapter, I am simply explaining the meaning. Edit log means the moment you make any changes to a sales entry. The sales entry was 1,000 rupees invoice entry, Raju account debtor to sales. That was a debtor's name. You put sales entry 1,000 rupees. And next day you change the sales entry. Some discount you give, you made it to 800 rupees. All these changes will be recorded in edit log. It records all the changes made to the data in a system. That is edit log. How does an audit log operate? Audit log means audit trail edit log. It's a combination of that is audit log. That I don't know whether they have written it properly or mistake. Automated records has automated logs. Keep it. This is audit trail. Audit trail record every activity that occurs within your system. It takes details of when, how, and by whom the activity was done. It also shows the response of your system to activities. All these things, audit trail. Then this is about edit log. Then benefits of audit trail, just heading you keep in mind. Sometimes they can ask this question, explain about audit trail and the benefits of audit trail, 7 marks. Directly a simple question, it will be simple mark. So, user accountability. A well-functioning audit trail system records the activities of user, promotes appropriate user behavior because everyone is held accountable for their doings. User accountability, promote organization, data security it promotes. Just a heading you keep it. What is auditor's duty to report on audit trail? An auditor need to report whether the company auditor has a duty to report on audit trail. As an auditor, he need to make sure whether the software used by the company has an audit trail feature and that audit trail feature is turned on. It is not turned off. There is no tampering of that. Because I'll tell you why they do this. These companies wanted to do some fraud with sales. So if audit trail feature is there, then sales is entered. If it's a wrong sales, it's a fraud sales, auditor can easily identify that. Just to click the sales, no debtor will be there. So, but if they want to do some fraud sales, they'll turn off the audit trail and put the sales figure. So will be very difficult for auditor to identify. So auditor need to make sure that company uses an accounting software which has Tally or something which has this audit trail, and that audit trail feature is turned on. Simple. Done. Today's topic is done. Then tomorrow let's cut off all these things. Here 70% of auditing is done. Now only 2 chapters are there. All the things there. And you can go to home and any area where you have a doubt, just tell me or write it to me on Instagram or LinkedIn, wherever it's comfortable for you. And if you want, you can take my number as well. Any doubts relating to auditing when you are writing your exams or something. And in my number, just text me on WhatsApp or Telegram. Just text me your name from CMA, this batch, free audit batch on this date. Just mention and text me. So I'll know who you are. Like, what is my number? 8129 368 007. Got it, right? If anybody wants, you can take it. Done. Okay, so that's it. I'll see you tomorrow. Chalega aram se bye. Like you're understanding stuffs, right? Whatever important areas, other stuffs I'm moving fast. It's not, you cannot understand that also, I know, because I'm reading fast and moving. Focused area like audit opinion today, CARO, all these areas you're understanding. That is only what I need. And guys who are attending it on live, see you tomorrow and come back tomorrow. That's tomorrow is the last day. We'll try to finish it tomorrow itself. Just one more day and your auditing is done. Where can you get this? In 3 days we are trying to finish it. Okay, so bye. See you tomorrow. Yeah. Around people are watching it on chat. Some people watching it on chats, write something in the comments.